Nitin Nahar. I welcome you all on behalf of JK Shah classes to this CF final amendment lecture. This lecture will be covering amendments which have happened in indirect taxes from 1st May 2022 till 31st October 2022, which is the cutoff date for May 23 examination. In this regard, you would have also noticed that Institute has released a supplementary study paper. Now this supplementary study paper is really bulky because it not just covers this but amendments prior to this as well. Let's see. Supplementary study paper which is released by Institute covers Finance Act 21. But Finance Act 21, all the provisions which were notified have been notified before 1st May 22, and those were part of November 2022 examination. So if you have written your examination in November 2022, you would have already covered Finance Act 2021 amendments, which were also covered in the amendment video for November 2022. Plus, if you see, Finance Act 2022 amendments are applicable for May 23. We will be covering these in our video. And notifications and circulars, Institute has given from 1st May 21 to 31st October 22. But for our lecture, we will be focusing on amendments from 1st May 22 to 31st October 22. Because all the amendments which have happened prior to this date were already part of May 22, November 22 amendment lectures. Clear with this? Yes. Now, there is a PDF attached to this video. There is a link. There you will get a PDF which covers all the amendments. I'll be making you write various things on those sheets at some places, and at some places it is completely printed. First of all, I want you to take a printout of that particular PDF file, only then continue watching. Otherwise, stop this video immediately, first get the printout and thereafter play it forward. I'll be waiting for you. Now, I hope you have taken a printout of this. In the initial pages, the page number will match the page number of your November 2022 textbook. It will match. Wherever it would not, I would tell you that. Plus, at the end, you will find various circulars which are issued by CBIC in concise form, along with one custom rules which have undergone complete change. Otherwise, you will be able to easily manage with this. The pages are based on the page number in your November 2022 textbook. Now, we will be starting with a small change which has happened in composition levy. Though, please be rest assured on one thing, that supply, time of supply, place of supply, the law has not undergone any change. There may be some circulars which are issued for supply. There are some circulars which are issued for place of supply. But the law in essence remains unchanged between 1st May 22 and 31st October 22. Let's talk about composition levy. There is a point in composition levy where a person is not eligible to take composition scheme. Under this not eligible to take composition scheme, there is a sub point which says manufacturer of specified products. And there are various products which are mentioned. One, you have pan masala, then you have tobacco, then you have ice cream, then you have aerated water, and finally various kinds of bricks and tiles. Now these bricks and tiles had earthen or roofing tiles. Then there was fly ash bricks. Then bricks of fossil mills. And building bricks. Now this is how it looks as of now. Earlier, there was one particular confusion in the industry where at one place government had said fly ash bricks containing 90% or more percentage of concentrates. That was a issue. Government has deleted that 90% and now it is fly ash bricks plain. This has resulted and given ease of whether the composition scheme would be available or not. So at present only these products are excluded. Fly ash bricks, plain language, any kind of fly ash bricks will not be eligible for composition scheme. This is the first change. So you can mention this particular part on page 84. Then exemptions have undergone various changes. Let's see it one by one. This is page number 89 of November 22 textbook. There used to be an exemption for hotel up to 1000 per day or equivalent. The exemption is deleted. Now this exemption would not be valid. That means at present hotels up to 1000 per day will also be liable to GST. Second, you recall residential dwelling used as a residence used to enjoy an exemption. Now what is added here? Here government has added except, and in this except part, except when rented to a registered person. Except when rented to a registered person. Earlier, residential dwelling for residents did not matter to whom you are renting it out. An exemption was available. But at present, residential dwelling for residents, if rented to a registered person, then it is taxable. That means the benefit of exemption is only when you give it on rent to an unregistered person. For example, director has been allotted a house and company is paying the rent to the landlord. The landlord is going to raise the invoice on the company. It is a residential house and it is being used as a residence by the director. In such cases, now this transaction will be taxable. We will also see in some time that government has mentioned that residential dwelling to a registered person would be covered under reverse charge mechanism. That means one change is exemption removed, second change is RCM liability added. Slight difference in the language which I will talk to you on RCM discussion. But at present you will mention that the exemption for residential dwelling was earlier plain, but now government has excluded one category, that is if it is given to a registered person. So these are the two changes which have happened in renting sector. Hiring remains same, construction remains same. Now talking about government. This is page 90. See, any service provided by government or local authority enjoyed an exemption. Then the law says except, and there were 4 limbs. The first limb spoke about Department of Post. If you recall, it was speed post, express parcel post, life insurance, agency services. These four were taxable. Now, any service by Department of Post is taxable. Any service, sir? Yes. There is only one exemption entry which is given to book post, ordinary post, post letter up to weighing less than 10 grams. That's the only exemption which is available. Now Department of Post providing any service will be liable to GST. So they have made it easy. They have removed lot of exemptions, and the effect of that is all these have become taxable. Second limb used to talk about transportation of goods or passengers. This remains as it is. Third used to talk about service in relation to vessel or aircraft. This remains as it is. Then any service other than 1 to 3 provided to business entity that was taxable under RCM, that remains same. So what has changed is, earlier only 4 services by Department of Post were taxable. Now any service by Department of Post is taxable. Now the exemption is curtailed and all the services of Department of Post are taxable. Sir, what if Department of Post is giving the service to government? Earlier it used to enjoy an exemption, but now that exemption is not there. Now it is liable to GST. So Department of Post providing service to Karnataka state government, will it be taxable? Yes, it will be taxable under forward charge. So these 3 will be taxable under forward charge. That means government will collect GST and discharge it. There is only one small exemption, but before I tell you that, see, basic postal service, money order, these used to enjoy a exemption. Now all services by Department of Post are taxable. You can write one point here: book post, comma, ordinary post, comma, inland letter, within bracket you will write envelopes weighing less than 10 grams are exempt. So at present the exemption is only for those paper letters. I mean, less than 10 grams is only that. Otherwise you will not get a post which is less than 10 grams. It's some slips which you receive as insurance premium receipt or a LIC receipt, where the postman just throws it on the ground and it gets delivered if he wants. That particular service enjoys a exemption. Otherwise everything else by Department of Post is taxable. Okay, other things in this exemption remain same. Now page 92. FSSAI used to enjoy an exemption which is now no more applicable. That means services by FSSAI at present are taxable. Coming to transportation of goods industry, multiple changes. 1. This railway equipment is deleted. That means now the list for rail, vessel and GTA is same. Relief material, defense equipments, newspaper magazines, agriculture produce, milk, salt, food grains, organic manure, these being transported by rail, vessel, GTA enjoy an exemption. Railway equipment used to enjoy an exemption earlier except for GTA, but now railway equipment is deleted. Plus there was this point, transportation from India to outside India in a aircraft or vessel. Earlier this exemption was valid till 30th September 2021. Then government had changed it to 30th September 2022. Now government has not extended it further. That means this is also as good as deleted with effect from 1st October 2022, as it has not been extended. So from India to outside India, whether it is transportation by way of aircraft or vessel, will now be taxable. Remember, we are talking about movement of goods, not about the supplier or recipient. Movement of goods from India to outside India, which was earlier exempt, is now completely taxable. Sir, what if I am charging from a person outside India and it qualifies to be export? If you are charging from a person outside India and it qualifies to be export, then you will not be required to pay any GST on that. But if you are charging to a Indian exporter, you are the transporter charging the Indian exporter. Both are in India. Even if the goods is going outside India, as the recipient is in India, it will not qualify as export of service. GST would have to be charged. But sir, can that exporter claim refund of that particular tax? The answer is yes, because exporter will be engaged in export of goods. Any inward supply related to this export of goods will be eligible for ITC, and also refund can be claimed. So the net impact is exemption being removed and made taxable, but on the exporters, in my view, there will be no burden as such. They will be either able to take ITC, or if the transporter is charging person outside India, it will anyways qualify as export. Okay. Now, if you recall this particular point, 1,500 and 750, there used to be an exemption for single consignee, single carriage. This particular exemption is deleted. That means at present, GTA providing services, you don't have to check 1,500 and 750. It's completely removed. Okay. Coming to transportation of passengers. Now, in November 22, the change was that stage carriage, contract carriage, auto, metered cab through e-commerce operator would be liable. Now, at present the change is transportation of passengers by air. You remember these airports in northeastern state, including Bagdogra in West Bengal, used to enjoy an exemption. Here government has added economy class. That means now the exemption for any flight starting or terminating in northeastern state is restricted to economy class. Business class tickets will not enjoy an exemption for any flight starting or terminating in northeastern states, including Bagdogra in West Bengal. This is the change which has happened in transportation of passenger sector. Okay. Then let's talk about agriculture. Agriculture, government has removed exemption for fumigation. Pest control in a warehouse of agriculture produce used to enjoy an exemption. Now the exemption is removed. But don't forget that processes carried out at the agriculture farm even today contains the word fumigation. Pest control at the agriculture farm even today enjoys an exemption, but pest control in a warehouse where agriculture produce are stored is now not exempt. The exemption is removed. Then for storage and warehousing, government has given an exemption for various products. At present, only 4 products are there. You will delete this nuts and you will delete everything after vegetables. That means at present storage and warehousing of 1, 2, 3, 4 enjoy an exemption. Cereals, pulses, fruits, vegetables. All other things which are stored in a warehouse will be taxable. But sir, what about storage of agriculture produce? Storage of agriculture produce even today enjoys an exemption. There is no change in that. Storage in agriculture produce is covered here, which is exempt, which was exempt, and I think it will remain exempt for some more years. Okay. Then there used to be an exemption for minor forest produce warehousing like bamboo, etc. But now government has deleted that as well. So these are the three changes in agriculture sector. Now moving forward, healthcare. See, I have also separately given you the entry for healthcare because it's slightly lengthy provision which is added, but the essence is clear. Room charges exceeding 5,000 per day, such room charges will be taxable. Not entire healthcare package. Only the room charges component of healthcare will be taxable. One thing should come to your mind. Healthcare service, room charges. Sir, healthcare is the principal supply. Room charges is only incidental or ancillary. That's completely correct. Government has first time vivisected or broken that charges into two parts. One, healthcare service will enjoy an exemption, but room charges exceeding 5,000 will not be eligible for the exemption. However, ICU, CCU, NICU and CCCU rooms still enjoy an exemption even if it is more than 5,000 per day. ICU, intensive care unit, NICU, neonatal intensive care unit, CCU, cardiac care unit, all these enjoy an exemption even today. We will see that in some more pages going forward. But then why have you kept this, sir? There used to be an exemption of common biomedical waste treatment operators providing services to clinical establishment. This is now deleted. There is a point added in this which we will come across in some time. Cord blood bank, preservation of stem cells, used to enjoy an exemption which is now no more applicable. Veterinary clinic exemption remains as it is. So two exemptions deleted, one exemption is curtailed, or the effect or room charges is now taxable. Okay. Charitable trust remains same. One change which has happened in this training or coaching in recreational activities. First, what government has done is the word recreational activities is shifted here in the first part. That means for sports, you don't have to check recreational or not recreational. For sports, you don't have to check. So recreational activity is first only for art or culture. And here the government has mentioned by an individual. And then balance part remains same, or sports by a charitable entity registered under 12AA. And in last November 22, there was a change, 12AA, 12AB. That would obviously be updated in your book. So be careful. Two changes. Recreational activity is now to be checked only for arts and culture, and now the exemption for arts and culture is available only for an individual. Other than individual, a partnership firm or a body corporate or a trust providing arts and cultures training and coaching will not be eligible for an exemption. Even if it is a charitable trust, doesn't matter, because now government is very clear that arts and culture classes will enjoy an exemption only if it is by an individual, not by anyone else. Sports, charitable entity. Be very careful, mark it as important for your exams. In fact, all the amendments are important, but just be careful about this. They can test you on recreational activity part. Okay. Coming to RBI, embassy, financial sector, let me tell you, RBI exemptions have been removed. So earlier, services by RBI was exempt. Services to RBI, it was taxable except for one service received from outside India. At present, any service provided by RBI or to RBI is liable to GST. Embassy exemption remains as it is, don't change anything there. Okay. Then there have been some exemptions which have been removed, like slaughtering of animals. Earlier it was exempt, now it is made taxable. IRDA to insurer, deleted. SEBI providing services, deleted. GST network providing services, deleted. Now leasing of assets by Indian Railways, this was already deleted in earlier amendments. And then we move on to reverse charge mechanism. Let me tell you, there's one entry added in exemption. We will see the new entries which have substantially changed in some time. First, let's complete these portions which are directly with the page number of your notebook. I mean page number of your textbook. Reverse charge mechanism and ECO. ECO, there were various changes in 9.5 in November 22. At present, 9.3 has undergone some changes. See, we had written about who is the supplier, who is the recipient in 9.3 and 5.3. 9.3 of CGST Act and 5.3 of IGST Act. At present, what is the entry added? Renting of residential dwelling provided by any person, and in the recipient column you will write registered person. Registered person. Now see the impact of this. Residential dwelling given on rent to a registered person, the registered person is going to be liable to pay GST. Notice one thing, here the law mentions residential dwelling. They don't say residential dwelling used as residence or used as other than residence. If you are giving a residential dwelling to a registered person, then in that case registered person will be responsible to pay the tax. First, government has removed the exemption for use as a residence and covered this under reverse charge mechanism. Clear with this? Great. This is a new entry. Now there have been two changes where some old entries have been slightly modified, like any service provided by government or local authority, and here business entity was written, correct? And we had written a note for this that this will not apply to first three limbs. That first three limbs has undergone a change. See, earlier Department of Post, only 4 services were taxable. Now Department of Post, all services taxable. And it is excluded from reverse charge. As it is excluded from reverse charge, these will be taxable under forward charge. Except for book post, ordinary post, inland letter, postcard weighing less than 10 grams. Those enjoy an exemption. Otherwise, Department of Post, all services are taxable under forward charge. So this is just a modification which is based on what changes have happened in exemption. Now, the last amendment in RCM is GTA, not paying tax at 12%. This was the language. GTA not paying tax at 12%. That means if GTA is paying tax at 12%, it was covered under forward charge. If GTA is not paying tax at 12%, it was covered by reverse charge. Here we had registered person, comma specified persons. Now what is the change? This line of not paying tax is deleted, and they have added a point here that GTA has an option to pay tax under forward charge by taking GST registration plus cannot change the option for a financial year. For a financial year. They cannot change this option for a financial year. This line was missing earlier. Earlier, GTA could shift from forward to reverse at any given point of time. It was not mentioned in the law. At present, the law very clearly states that if GTA opts to pay under forward charge, then in that case, it will continue to pay under forward charge for the financial year. And the application says some procedural aspects where application has to be made before the start of the financial year. Once you make that application, you can continue under forward charge for that particular financial year. Be very careful about one thing. Though GST rate notifications are not there for your syllabus, but now GTA has got two options. Let me explain it to you in detail. GTA providing service to unregistered person other than specified person. This enjoys an exemption. Earlier this was exempt, now also it is exempt. GTA providing service to registered person, comma specified person. This, there are two options. GTA takes registration and opts to pay under forward charge, and for this they will give a declaration in the invoice saying that we have chosen to pay tax under forward charge. If GTA pays tax under forward charge, then obviously no reverse charge will apply. But if GTA does not opt for forward charge, then this is taxable under reverse charge. See, RCM rate was 5% and is 5%, but here government has provided two rates, 12% and 5%. Under 12%, GTA gets ITC on its purchases, but under 5%, no ITC to GTA for its purchases. But sir, why will GTA pay tax at 5% and not avail ITC? Sir, the purpose of GTA taking registration is so that they can get ITC, because if a supplier's liability is covered by reverse charge mechanism, then in that case such supplier will not be eligible to avail input tax credit. Then why will a GTA pay tax at 5% and not get ITC? Why will they even choose this? Now, interestingly, the law has not said whether you have to apply this as a whole or you have to apply it transaction wise. So there is a possibility that some GTAs charge 12% on certain transactions and 5% on certain transactions. Possible, sir? Why not? The law does not restrict such interpretation. But in the exams, obviously the rate of GST will be given to you. If it is taxable under forward charge, apply the rate which is given. If it is taxable under reverse charge, then in that case apply the rate which is given in the question. But sir, how do we identify whether it will be forward or reverse? Careful. If the GTA opts to pay under forward charge, then if you are calculating for the recipient, don't include it in your RCM liability. If GTA is not opting, that is, it is unregistered, then in that case the recipient will have to pay tax under reverse charge mechanism. Clear? Okay. What you can do is you can pause the video here and you can make a note of this on reverse charge page which is available to you. You can note this here. So totally 3 changes. 1, residential dwelling point. Second, government related change, which is only cosmetic change. I mean, it only provides for a change because the main provision of exemption has changed. And third one is GTA, this not paying tax is deleted and now they have an option to pay under forward charge. So you'll write this much and you will draw this here. Okay. Now coming to input tax credit. What are the changes, sir? Obviously input tax credit has undergone some changes. The first change is section 16. See, we had learned 5 conditions to avail ITC. First one, you are in possession of an invoice. Second, receive the goods or services. Third, supplier has paid the tax to government. Fourth, a valid return is filed. Fifth, supplier has furnished details in GSTR1 and it is communicated to recipient in GSTR2B. These were the 5 conditions. Now 6th condition is added, and that 6th condition which is added is ITC is not restricted under section 38. Sir, when will we learn this 38? 38 you will learn in GST returns chapter in some time. Now, government is planning that the document, that is GSTR2B, which gets auto generated, now it will have some segments where government will start denying ITC on certain transactions, and they have also listed the conditions based on which they will deny ITC on certain transactions. This is the future plan. At present, most of those provisions say as may be notified. And has anything been notified till now, sir? No, because see, whenever the law says as may be prescribed, now it takes time for the provisions to come into picture. At present, only the law is amended, that is section is amended. As may be prescribed at present is not available. In some time it should be available, but that we will see when we get into section 38. At present you are going to write this, that 6th condition is added. Plus, you recall section 16, time limit to avail ITC. Time limit to avail ITC was due date for filing September month return after the financial year, or date of filing annual return, whichever is earlier. Now it is 30th November after the financial year or date of filing annual return, whichever is earlier. So government has given about, I would say, 1 month extension, because due date for September month return used to be 20th October. Instead of 20th October, now government has mentioned 30th November after the financial year. So government has been generous in providing 1 extra month time for taxpayers for their welfare. Fair enough. Third point. Under Rule 42 and 43, you recall definition of E? E means exempt supply plus supply where recipient is required to pay tax. Then E excludes. What all E excluded? E excluded interest earned other than interest earned by banks and financial institutions. Here nothing has changed. Then it used to exclude transportation of goods in a vessel from India to outside India. Now, this point, transportation of goods from India to outside India, this has become irrelevant now. E is excluding something which is taxable. It is not at all part of E. This transaction was earlier exempt, but it was not included in E. Now it is taxable. Who said it is taxable now, sir? We just discussed some time back that India to outside India, aircraft and vessel, both were exempt till 30th September 2022, which has now become taxable. That means this is now a taxable transaction. It doesn't matter even if it is excluded. Anyways, it is not going to be part of E. C. Negative list other than land and building. This also remains same. Sir, then what is the change? D. Value of duty credit scrips. This is the change, people. Value of duty credit scrips. Now let me tell you something. Value of duty credit scrips. Duty credit script are basically cashbacks which are given by government on various export transactions. There were various schemes like MEIS, SEIS. There is a scheme called as RODTEP, remission of duties and taxes on export product. For all this, you get scrips. Now these scrips are exempt goods. Do you learn goods related exemption? No, you don't learn goods related exemption. But if this is exempt, the impact is it becomes E. So to that extent, I will have to reverse ITC. Now government has said that value of duty credit scrip will be excluded from the computation of E. If it is excluded from the computation of E, that means you don't have to do reversal to this extent, because E by F you need to reverse. E being exempt supply, F being total supply. Now that exemption, now the clarity is provided that this will not be part of E. Is this good for us? Yes, obviously this is a good change for us. Then fourth point. See, earlier credit was based on provisional ITC under section 41. Law used to say supplier has paid the tax, only then you can take ITC. But see, practically it was not possible to check whether supplier has paid the tax or not. So government used to say under section 42 and please take provisional ITC. Now the language of provisional ITC is changed to self-assessed, meaning at present there is no more a concept of provisional ITC. Now the ITC is self-assessed by taxpayer. That means the taxpayer will decide his input tax credit. Sir, if he claims extra, obviously he will have to reverse it later, or if he does not pay, then government will recover it, and you know the modes of recovery. So now that provisional word is replaced by self-assessed ITC. This is the change. Section 41 again we will learn in returns chapter in some time. Last change which has happened is non-payment within 180 days. You remember ITC reversal? Now government has clearly clarified that this ITC reversal will have to be shown in GSTR 3B along with interest payment at 18% per annum from the date of utilization till the date of ITC reversal. Because at present the interest component will be calculated strictly based on date of utilization. We will see that amendment in payment chapter, where the language of section 50 is changed. Non-payment, earlier the issue was where do we report it, because there was GSTR 2, but those provisions were there, it was not available online. Now it clearly says that ITC reversal has to be done in GSTR 3B. So government has given complete clarity on what has to be done here. Here the law used to also mention that proportionate reversal if part payment is made. You recall this? Say suppose you had to pay 118 rupees along with 18 rupees GST. If you have not paid 118, you had to reverse 18 rupees along with interest. Now say suppose you have paid 59. 118 was payable, 59 you have paid within 180 days. Then reversal will be only to the extent of 59, that is 9 rupees. This was the provision. Mistakenly, this line is deleted from the law. But just in January, government has again brought back this proportionate reversal. January, government has again brought back this proportionate ITC reversal. So I think May 23 will be the only examination in the history of indirect taxes where this proportionate reversal is deleted. That means even if you have not paid a single rupee, you will have to reverse full, though it is illogical. That's why it was illogical. Just in a hurry, I think government did not notice this. As the industry pointed out, government has again amended the law. So at present the law is amended, but for May 23 it happened before 31st October. So before 31st October this proportionate line was deleted, and after 31st October this line is again added. So May 23 will be the only exam that 118 is payable even if you have paid 117. Still there is a non-payment of 1 rupee, then ITC reversal will be 18 rupees, because 100 plus GST, you reverse only the GST component. Sir, but this is illogical. That's what I am telling you. This is completely illogical. In fact, it would be applicable only for one attempt. You can even write the answer saying that proportionate ITC reversal will be applied, because it does not make sense that for 1 rupee you are making the person pay 18 rupees along with interest. Clear with this? Okay, great. So these are the changes which happened in ITC. Now coming to registration chapter. Now registration chapter, there have been one major change. Though I mean on the face of it, it looks very basic, but for composition it's completely amended. See, let me talk about cancellation. See, cancellation circumstances, there were two types of circumstances. One, application by registered person, and second, suo motu cancellation by officer. Now suo motu cancellation by officer, 4 points were there. Out of that, 1 point was not filed returns for 6 months. Correct? Not filed returns for 6 months. Now, they used to mention about composition based on quarters, but at present, not filed return for 6 months remains as it is. For QRMP filers, government has mentioned 2 quarters, and for composition dealer, his registration would be suo motu cancelled by officer if composition dealer does not file beyond 3 months after due date. Okay, let me see. Do you recall composition scheme due date for GSTR 4? The due date for GSTR 4 is 30th April. So 30th April plus 3 months. That means if you have not filed by 30th July, then in that case, the registration would stand cancelled. Not automatically, obviously officer will issue a show cause notice, you will get a time to reply, but can officer initiate suo motu action for cancellation? The answer is yes, if a person fails to file return being a composition dealer beyond 3 months from the due date for the return. So mention this entire thing. 2 changes. One, new thing added for QRMP. QRMP, if they don't file for 2 quarters, officer can initiate action. And second one is for composition dealer, which is 3 months beyond the due date. Clear? Okay. And you anyways recall that when we talk about cancellation, say suppose a person has filed the return before the cancellation, then in that case it is deemed to be revoked. You better write it. If a person files pending returns before order of cancellation, comma, then the suspension is deemed to be revoked. Sir, what is suspension? Forgot. Suspension is deemed to be revoked. See, when officer does a suo motu cancellation process, he can suspend the registration of the other person. Suspension is basically temporary, but suspension has a great effect. Reason being, you cannot make taxable supplies during suspension, neither you are required to file returns for that period. Now government has clearly said that during that entire process, while the registration is suspended, if the person files all the return, then in that case the objective was that person files return because his registration was being suo motu cancelled. as he was not filing returns. Now if he is filing the returns, why should I cancel his registration and then he will apply for revocation? If before cancellation he files all the return, then suspension is revoked. Okay. Now, a payment chapter, two very small changes. One is with regard to IMPS and UPI added as mode. At present, online it is not available, but it is amended in the law. So the law has been amended. In online it should be there in some time. Earlier it was only net banking, NEFT, RTGS, over the counter. Now UPI, IMPS modes have been added. Plus, one important amendment which has taken place is this. Very important. See, you remember e-cash ledger? Major head I, C, SUT, cess, and minor head tax, interest, penalty, fee, others. Now, can you transfer within e-cash ledger? The answer is yes, you can transfer within e-cash ledger. There is no restriction by filing a PMT09 form. The next question which arises is, can you transfer balance of e-cash ledger lying in JKSC Bangalore to e-cash ledger of JKSC Mumbai? People, we are only talking about e-cash, don't start transferring e-credit. So if there is a e-cash balance available in JKSC Bangalore, can JKSC Bangalore transfer it to JKSC Mumbai? This was not permitted earlier, but now provision is amended, though it is not available online at present, but provision stands amended that you can transfer money from one e-cash ledger to another e-cash ledger, but it has to be under the same PAN. People, JKSC cannot transfer me, but JKSC can transfer between Bangalore branch and Mumbai branch. Permitted, sir? Yes. There is one precondition, that JKSC Bangalore should not have a payable under e-liability ledger. Obviously, if they have a payable under e-liability ledger, first they need to clear that. Thereafter, they can transfer money to other state branches. Let's have a look. This talks about C&I, but please understand, SGST would be amended under SGST Act. So don't worry about C&I. Transfer of C&I from one e-cash ledger to another between distinct person. People, from one e-cash ledger to another between distinct person. Government has allowed such transfer if the transferor does not have any unpaid liability in his e-liability ledger. Now let's move forward. The next change is in collection of tax at source, TCS. See, TCS, a very small change which has happened. First of all, they have deleted all this points with regard to communication of discrepancy, etc. All that is removed. But if there is any error while reporting TCS data, then in that case, earlier it was due date. Now it is replaced by 30th November. So you will mark this. This is the amendment. Earlier it was due date. Now it is 30th November after the end of financial year, or actual date of furnishing annual statement, whichever is earlier. Careful. So the only change is due date changed to 30th November. You can mark this as amendment. This is directly given in this page. So you will read it properly. In your November 22 book, this was due date. Okay. Now, mark it as a very important amendment. Interest, yes. People, interest See, if there is a delay in payment of tax, the rate of interest is 18% per annum. This was already there. This is called as 50 subsection 1. But this was already there. No change in this. It clearly provides, let me give you a recall. June liability, if you report in June GST return, then interest will apply on net liability. But June liability, if you report in a future GST return, then interest will apply on that entire liability which was not reported in the correct month GST return. The next point was, say suppose a notice is issued under 73-74 and after that you file the return, then in that case again no GST relief, no interest relief for net. You'll have to again pay on gross entire liability. This was already there. Now 50 subsection 3, which was inactive because of the wordings and GSTR 2 etc. which never came into life, there was a issue with regard to unutilized. I mean, whenever you talk about unavailable ITC or wrongly availed ITC, what should we do on that ground? Now government has clearly said that if a person has wrongly availed ITC, interest will not apply unless he utilizes it. So now the wordings of the law is interest will apply only when wrongly availed ITC has been utilized. Careful. Just because you have availed wrong ITC does not mean that interest will be applicable. Interest will apply only when you utilize that wrongly availed ITC. Let me give you an example. Say suppose you have wrongly availed ITC of 10,000 and this wrongly availed ITC has been utilized to the extent of 6,000. Then interest will be applicable on 6,000, not on 10,000. Sir, if I have not used even a single rupee, then in that case interest will not be applicable for ITC wrongly availed. Sir, can penalty apply? Yes, because though this is not an amendment, but I am still telling you, penalty provision uses the word wrongly availed or utilized. Even today penalty can apply in such cases, but interest cannot apply in wrongly availed ITC. Interest can apply only when the wrongly availed ITC has been utilized. Clear with this? Okay. Now the question arises, when is ITC said to be utilized? Let me give you an example. Then we'll read the provision. Say suppose I have wrongly availed ITC of 30 lakh in June 2023 GST return, and this June 23 return I filed on 20th July 23. When have I wrongly availed? 20th July 23. Sir, will interest apply from 20th July 23? Depends on whether I have utilized it. Let me tell you, the ITC balance as on this date was 1 crore. Now you tell me whether have I utilized it. Sir, no, you have not utilized it. You have wrongly availed 30 lakh. You already have a ITC balance of 1 crore. You have not utilized it. Okay. Next month, July 23, when I file my return on 20th August 2023, my ITC balance was 40 lakh. Have I utilized wrongly availed ITC? August return was due on 20th September, but I filed it on 17th September 23. Balance was 22 lakh. It is utilized to the extent of 8 lakh. So will interest apply on this 8 lakh? The answer is yes, interest will apply on this 8 lakh. When is it utilized? It is utilized on this date. And say suppose you reverse it in October GST return, and October GST return you filed it on 16th November 2023. You reversed entire 30 lakh. Then in that case, from here till here, interest will apply on 8 lakh, provided the balance still remains 22 lakh. And then in October anyways you are reversing ITC, wrongly availed. So interest will apply on 8 lakh from 17.9 to 16.11 and will multiply 8 lakh into 18% per annum. The rate notified is 18% per annum, but government has a power that it can increase up to 24% per annum. At present the rate is kept at 18% per annum. And number of days, can you see, calculate 13 days, 31 days in October, 16 days in November. So total 60 days interest will be applicable. This will be the computation of interest. Clear? You can also make a note of this example, that wrongly availed ITC, how it was utilized, and thereafter what would be the interest computation. And this is how you arrive at the interest computation for wrongly availed and utilized. So let me make a statement. In case of wrongly availed ITC, interest will be applicable only when it is utilized. What is the date of utilization? Date of utilization is the date on which the balance in e-credit ledger falls below the wrongly availed ITC. If you don't have any balance in e-credit ledger, then you have utilized the entire thing. Now, law has also mentioned that the date of utilization will be due date of return or date of filing return, whichever is earlier. So due date for August return is 20th September or 17th September, whichever is earlier. So if you have used it on 17th September, that will be considered. If you file the return late, then it is deemed that you have to calculate interest from 20th September. Clear with this? Okay. Sir, what if the ITC balance is utilized by other than returns? I mean, I have not utilized it through returns. Sometimes what happens is I need to pay some liability. I can pay it immediately by filing a form called as DRC03. I can file it and pay a self-assessed tax. In such cases, what is the date of utilization, sir? In such cases, date of utilization will be date of debit in e-credit ledger. Whenever that money was debited through e-credit ledger, that will be the date of utilization. Let me show you the provision now. Now it will be easy. Where the ITC has been wrongly availed and utilized. Let's read note 2. Note 1 has nothing different. The interest shall be calculated on the amount of ITC wrongly availed and utilized for the period starting from date of utilization till the date of reversal of such credit or payment of tax in respect of such amount. Further, an explanation has been added to the said new rule 88B. 88B basically provides us from where to calculate date of utilization. Provides that ITC availed shall be said to be utilized when balance in e-credit ledger falls below the amount of ITC wrongly availed, and the extent of such utilization shall be the amount by which balance in e-credit falls below the wrongly availed ITC, only on that 8 lakh. Further, date of utilization of such ITC shall be taken to be due date for filing return or actual date of filing of said return, whichever is earlier. This is important. Any other case, date of debit in e-credit ledger. Whenever it was debited from e-credit ledger, from there it will apply. So very important point. Interest, there has been a change, can expect a question. Plus I think a question will also be given in the RTP on this aspect. Be very careful on that. Okay, then one small change in last date to issue credit note. See, last date to issue credit note earlier was due date for filing September month return or date of filing annual return, whichever is earlier. So now you know what has happened. 30th November after financial year or date of filing annual return, comma, whichever is earlier. So you can mark this. This is the amendment. In this entire page, this is the only amendment. Other things remain as it is. Okay. Then e-invoicing, I mean, I have directly given you the change here itself. Earlier, e-invoicing was mandatory for those whose turnover exceeds 20 crore in any of the preceding financial year starting from 17-18. Now that limit has been reduced to 10 crore. Any further limit reduction, sir? As of now, nothing. 10 crore is what is the stand even today. So if any of the preceding financial year turnover exceeds 10 crore, mandatory to generate e-invoice. And what's the impact? If you don't generate the invoice, then it is merely paper and your recipient will not get ITC when it is mandatory for you to issue e-invoice. Okay. Mark this. See, there are certain cases for which no e-invoicing is required even if your turnover exceeds, like SEZ unit, insurer, GTA, banking company, government, local authority, passenger transport service providers. No need to issue e-invoice. Now they need to now give a declaration that we have not issued e-invoice even though the aggregate turnover exceeds notified limits for e-invoice. So this declaration has to be given by them on the invoice. Who has to give the declaration? These persons. That even though our turnover exceeds, but we are not required to generate e-invoice. Okay. Now let's talk about GST returns. People, a number of amendments have happened in GST returns. First of all, let me tell you that the process flow QRMP, there is no amendment. Quarterly return monthly payment scheme remains as you have learned for November 22 exams. Process flow remains same. The only thing which has changed is in the process flow is NRTP due date. See, NRTP due date earlier was 20th of next month or 7 days from last day of valid registration, whichever is earlier. What has happened? This 20th is changed to 13th. This is the change. Otherwise, it remains as it is. Process flow. Within returns chapter, there have been a lot of changes. Let's see those. circle this. This is a completely new provision. 38. Earlier 38 is completely wiped off. Anyways, it was not being used. New 38 is replaced. Now there is no filing of purchase data. Department or system will give you a communication in a auto generated form, which is GSTR 2B. So now GSTR 2B has a backing provision. See, earlier GSTR 2B was there, but it did not have a section of its own. Rules came first, section came thereafter. But now it has a complete section as to how the communication will work. So section 38 now is a full-fledged provision which is there. Then section 41 was earlier provisional ITC. Now it is called as availment of ITC. Let's see it further. All due dates given here. GSTR 1, 2B can be monthly or quarterly. 2B is generated, you don't have to file it. So all the provisions where GSTR 2 was mentioned, all those have been deleted. Anyways, we have never been reading it, so we will not be deleting it from anywhere. 3B, you know, QRMP and monthly. 4, nothing changed. 5, this 13th I have already told you, you can circle and keep this. 5A, no change. Nothing else in this. Section 37. Now section 37, these are the two things which you need to be careful. See, GSTR 1 or IFF cannot be filed if 3B for previous month or previous quarter is not filed. This was already there. Nothing has changed in this. But now government has added this. Filing of GSTR 1 for current tax period is possible only when GSTR 1 for previous tax period has been filed. So if you have not filed July GSTR 1, you cannot file August GSTR 1. Not permitted, sir. First file July GSTR 1, then file August GSTR 1. However, the provision also has a point that on the recommendation of council and subject to certain conditions, government may allow a registered person to furnish outward supply even if he has not furnished outward supply for one or more tax period. Has anything been prescribed or notified in this, sir? Nothing at present. At present, the law is very simple. If you have not filed GSTR 1 for August, you cannot file it for September. Sir, will this condition apply for IFF? Don't forget, invoice furnishing facility is optional. There nothing has changed. Then rectification of errors. Rectification of errors in GSTR 1, earlier it was mentioned as date of filing September month return. Due date was not there. Date of filing September month return was there. Now everywhere government has changed it to 30th November in the entire GST returns chapter. 30th November after the financial year or date of filing relevant annual return, whichever is earlier. So this is the change. Mark this. Okay. This is a completely new section, section 38. Let me tell you some background behind this. See, so GSTR 2B was earlier called as auto drafted. Now it is called as auto generated. That's one change. GSTR 2B now has a backing section, that is section 38. GSTR 2B, two things are important. First, GSTR 2B will provide for ITC which may be available. It will give you a field that these ITCs may be available. Out of that, you check eligible and ineligible. Don't take ineligible, take eligible ITC. Second part is GSTR 2B will provide ITC which shall not be available. The law says that this will be called as restricted ITC. System is going to restrict ITC based on certain criterias in the law. The moment it is restricted, will you get ITC? The answer is no. We just saw one condition is added under ITC chapter, and the condition is it should not be restricted under section 38. That's what you are learning. So the moment ITC falls under restricted category, you will not be eligible to take ITC. Sir, but how will system start restricting, sir? Will it start restricting block credit, or what will it do, sir? It's not about block credit, people. ITC will get restricted by system based on criteria of your supplier. Sir, if supplier has done a crime, my ITC will be restricted. If supplier has done a crime, my ITC will be restricted. But what kind of crime, sir? Let me tell you. Let me give you some examples. First one, supplier GSTR 1 output tax versus GSTR 3B output tax. There is a variation up to such percentage as may be prescribed. But this percentage at present is not defined. Government may in future says if the difference between 1 and 3B is more than 10%, then recipient's ITC will get restricted. Now, at present the percentage is not prescribed, so I don't expect a practical question to come in this. But obviously the law is amended, so a theory question can be expected. GSTR 1 3B, say suppose you have reported sales of 100 in GSTR 1, but in 3B only 80 is reported as sales. So that means you have discharged tax only on 80 rupees. In that case there is a issue, and the issue will be that all the recipients ITC will get restricted. And the best part is you will not be able to identify which recipient's ITC will be restricted. That means such supplier, whatever invoices he has issued, all that will fall under restricted category. This is dangerous, sir. Correct. So we don't have a percentage, we don't have how the mechanism will work completely as of now, but the law is amended. Law clearly provides if your supplier is bad, you will have to also lose something. Tell me one thing, once your ITC gets restricted from a particular supplier, will you purchase from him? You are not going to purchase from him. If you stop purchasing, he will not be able to sell. That means he will have to correct himself. So government is very clear. I will make the suppliers learn a lesson from the recipients. That's the target. In fact, the law also provides that if supplier has availed excess ITC compared to 2B versus what he has reported in the returns. Say suppose 2B was saying 100, he has claimed 200 as ITC. Government is like, such supplier I will not leave. Such supplier, whatever invoices he has issued to his recipients, all that will be restricted. Sir, government should catch the supplier, na? Why is government catching recipient? Government is catching whomever is available. See, government can do a proceeding against supplier. Now government will also restrict ITC of recipient and do proceedings against recipient also. It's going to be madness and chaos, sir. Yes, this is dangerous. One more point says newly registered persons as may be prescribed. How newly registered, for what time, all that will be prescribed in future. Then rule 86B violated. Sir, what is 86B? There is a provision where 1% you have to pay through e-cash ledger. It is applicable only when taxable value in a month exceeds 50 lakh. There are various exceptions, that if you have paid income tax of more than 1 lakh in 2 preceding financial years, then such condition will not be applicable. That rule 86B, if a person is required to follow and he has not followed, again the ITC will be restricted for such category of persons. Government has made these provisions very strict. Government does not leave at this stage. Government also provides, saying that such other class of persons as may be notified or prescribed. This is going to be a very dangerous point in future. At present, section is amended, prescribed percentages are not available. So let's at present have a look at the section. Section 38. The details of outward supply furnished under 37 and such other supplies as may be prescribed, and an auto-generated form containing details of ITC shall be made available electronic to the recipients. It will be available on monthly as well as quarterly basis. 2B shall contain details of supplies in respect of which ITC may be available to recipient. Okay. 2B shall also contain details in respect of such credit that cannot be availed. This will be restricted category. Once it is restricted under section 38, can you claim ITC? Wholly or partly on account of details of said supply being furnished by registered person covered in any of the following cases. So you are talking about suppliers who are covered under any of these cases. So if your supplier is covered under this, you as his recipient will not get ITC. Sir, government should catch supplier. Government has the power to catch supplier. Government will also restrict your ITC. Sir, tax collections are bound to increase with this. Yes, but now you have to concentrate for your examination. By a registered person who has defaulted in payment of tax and default continues for period as may be prescribed. Supplier has not paid even a single rupee of tax for, say, suppose 2 months, 3 months, 4 months, 5 months, 6 months. That government will tell us. By a registered person whose output tax payable based on 1 exceeds output tax paid in 3B by such limit as may be prescribed. Nothing prescribed as of now, sir? No. By a registered person who has availed excess ITC by such limit as may be prescribed compared to ITC in 2B. Excess ITC. Your supplier has claimed excess ITC. Forget about you claiming excess ITC. Government is saying if your supplier has claimed excess ITC, I will stop your ITC. By a registered person who has defaulted to discharge liability under 4912 read with rule 86B. 1% through e-cash ledger. Basically, the provision says you can use 99% of the liability, and 99% of the liability can be discharged through e-credit. Then by registered person within such period as may be prescribed. I mean newly registered persons. This is not prescribed, and government does not stop here. Such other class of persons as may be prescribed. You can give a flower bracket. Nothing prescribed as of now. Okay. 39, what is the change, sir? 39, the change is this. You will mark this. Amendment. and you will mark this amendment. So let me tell you, earlier time limit for rectification of any mistake under section 39 was due date for September month return or date of filing annual return, whichever is earlier. Now it is 30th November following the end of the financial year. Same thing, sir? Yes. Or date of filing annual return, whichever is earlier. These are new points. If you don't file previous GSTR 3B, then you cannot file current GSTR 3B. So if you have not filed July GSTR 3B, you cannot file August GSTR 3B. Second point, if a person has not filed GSTR 1 of August, then he cannot file 3B of August. Hey, careful. Be very careful. If you don't file previous 3B, you cannot file current 3B. If you have not filed 1 for August, then you cannot file 3B for August. Simple. First file 1, then file 3B sequentially. Don't play with government. Government has trapped everything. People used to do all this. Some used to file 1, not file 3B. Some used to file 3B, not file 1. Some used to file next month 3B before filing previous month 3B. Now government says you first file 1, then file 3B, then file next month 1, next month 3B. Go in a order. Government has completely kept this in place. Plus, government has also specified one important aspect, that I may prescribe a class of registered persons who will be able to file returns even if they have not filed previous GSTR 1 or 3B. Anything prescribed till now, sir? No. At present only the law is there. Let's have a look. A registered person shall not be allowed to furnish a return for a tax period if return for any previous period is not filed. The registered person shall not be allowed to furnish a return for a tax period if outward supply, that is GSTR 1 for said tax period, has not been filed. Careful. File current GSTR 1, file previous 3B before filing 3B for current month. However, government may, on the recommendation of council, by notification, subject to such conditions and restrictions as may be specified, allow registered person or class of registered person to furnish the return even if he has not furnished the return for one or more previous tax period or has not furnished outward supply for the said tax period. So government may specify certain exceptions to this, that you will be allowed even if a person does not file. Maybe in future government will come up with some changes. Okay, you can write nothing prescribed for this. Nothing notified as an exception. So at present you have to file previous returns, then only you can file current returns. Okay, coming to section 41. 41, availment of ITC. People, first let me tell you, earlier it was mentioned as provisional ITC, now it clearly says self-assessed. You will self-assess your ITC, and whatever you self-assess, that self-assessed amount will be reflected in your e-credit ledger. But sir, later on if I get to know that supplier has not paid the tax, now government says later if you get to know that supplier has not paid the tax, then you must reverse the ITC taken along with interest at 18% per annum from the date of utilization till the date of ITC reversal. Remember, throughout the law, now ITC interest will apply only when it is wrongly availed and utilized. So government is saying if supplier has not paid the tax, then in that case you will reverse ITC along with interest. Again, this provision says as may be prescribed. Till 31st October nothing was prescribed, and now it has been prescribed, but that you will not learn for May 23. May 23 the law says I will prescribe how you have to reverse ITC, how you have to pay interest, where you have to report it. Government will prescribe that. Till 31st October nothing prescribed in 41. Then after some time, say suppose supplier has paid the tax. Imagine this, supplier has paid the tax. If supplier has paid the tax, then in that case can you re-avail ITC? Yes. And you remember, time limit for taking ITC is there, time limit for re-availment is not there. Time limit is only for availing, not for re-availing. Okay, so I can re-avail ITC, sir, if my supplier pays? Yes, you can re-avail ITC if your supplier pays the tax to government. Sir, what about interest? That becomes your cost. Sir, then government is taking interest from me? Yes. Government will also take interest from supplier. Government is earning double interest. Is it, sir? Yes. 41 is very simple. You self-assess your ITC. Later you get to know supplier has not paid the tax. Reverse ITC along with interest. When supplier pays it, you can re-avail ITC. Interest you will not get. Let's see. Every registered person shall subject to such conditions and restrictions as may be prescribed be entitled to avail credit of eligible ITC as self-assessed in the return, and such amount shall be credited to his e-credit ledger. The credit of input tax availed by the registered person in respect of such supplies, the tax payable whereon has not been paid by supplier, shall be reversed along with interest as may be prescribed. Till 31st October nothing prescribed under 41. Provided that where the said supplier makes payment of tax payable in respect of aforesaid supplies, then the said registered person may re-avail amount of credit reversed as may be prescribed. Anything prescribed, sir? No. You can write nothing prescribed till 31st October 22. Okay. Annual return, nothing, same for 21-22, whatever was the stand for November 22, it remains same. Final return, nothing changed. Default furnishing, nothing changed. Late fee, you have already seen this in November 22, that late fee has been rationalized. Maximum late fee, I have just given it here so that you can go through it in a table form. GST practitioner, basically GST practitioner, some places it was mentioned that he can furnish out inward supply. Now inward supply is now no more there. So what you can do is you can delete this line inward supply. That's it. I mean, that's the change. Earlier he could file GSTR 2 on behalf of the client. There is no furnishing of inward supply actually. From last 5 years we have never seen that. So provision is not there. Okay. Now coming to refund chapter. People, refund chapter, there have been some amendments. Now refund chapter, you very well recall that 2 years is the time limit, but for e-cash ledger there is no time limit. This was clarified by CBIC for November 22. Now relevant date, 2 years is counted from specific dates. They have added this for SEZ supplies. Basically when you are making a supply to SEZ, from where will you count 2 years? This was not defined in the law. To bring clarity, they have added this particular point. So SEZ supply, though the same thing is mentioned, due date for furnishing return, but this is the amendment. So SEZ supplies is now added. Clear? Okay. Then documentary evidence, everything remains same. I've just given it to you here. Wherever on that page there was a change, I've just included that. Then document prescribed, government has added a point of export of electricity. See, for export of goods, this is what you had to furnish, shipping bill. But let me tell you, export of electricity, there is no concept of shipping bill. Is it, sir? Yes. Export of electricity, basically export is permitted only once approved by regional power committee. Without that you can't export electricity just like this. Sir, is electricity goods? Yes, it is exempt goods, and that's why you don't learn it, because you don't learn goods related exemption. So export of electricity, the question was whether refund is eligible. The answer is yes. Let me tell you, zero rated supply is very strong. Even if some exempt supply is exported, then you get the benefit of zero rated supply and you start getting refund as well. Now the question was, what document should be submitted? Basically you will submit whatever is the quantity exported, unit price, report from regional power committee, agreement copy. Game over. You will get your refund. Let's see. A statement containing number and date of export invoices, details of energy exported, tariff per unit for export, which should be as per agreement, copy of statement of scheduled energy for exported electricity by generation plant issued by regional power committee secretariat, and copy of agreement. This is what you have to submit. Other things remain as it is. Okay. Then, can UN and embassy claim refund? Yes, UN and embassy can claim refund. Earlier, the time limit was 18 months. First it was 6 months, then government made it 18 months. Now they have made it 2 years. So you'll write this is the amendment. From where? Last day of the quarter in which the supply was received. This small amendment. Consumer welfare fund, nothing changed. Tourist, even today is waiting for this. Prescribed, don't know when will it come. Anyways, this is not an amendment, it remains as it is. Okay. Let's talk about zero rated supply. Zero rated supply, see, zero rated supply, you have a formula. What is the formula, sir? Turnover ZRS goods plus turnover of ZRS of services divided by adjusted total turnover into net ITC. This is the formula, correct? What has changed, sir? See, net ITC remains same. ZRS of services also remains same. Adjusted total turnover also remains same. ZRS of goods also remains same, but with one explanation, and you will mark this. This is the amendment. Now, let me give you a brief. See this. ZRS of goods was export value or 1.5 times of domestic price of like kind and quality, whichever is lower. This was already P point. Now, let me tell you, there are two kinds of exports. First is FOB exports and second one is CIF exports. FOB export is where you have billed the client only up to the port in India, free on board. CIF is, see, FOB is here. You add freight and insurance, you reach CIF. So, exporters used to bill in two forms, either in FOB form or in CIF form. Now, those exporters which were billing in CIF form used to get one advantage, and that advantage was CIF value will be higher compared to FOB. If your export is high, you will get more refund, correct? Most of the people entered in CIF contract and CIF was mentioned in invoice. So they used to take CIF value as export value and they used to get an advantage. Plus, some persons who were only in export business used to face one issue. We were comparing CIF with 1.5 times of domestic. In domestic, you will not have this freight and insurance to US, na? So genuine exporters who were only in export, they were also not happy with this export value or 1.5 times. Government should have deleted this. You know what government did? Government said export value will be FOB on shipping bill or invoice value, whichever is lower. Wonderful. See the beauty, people. First of all, here lower is mentioned. Now, to find out export value, again you have to do whichever is lower. You understood? Dangerous point. FOB in shipping bill or invoice value, whichever is lower. Now, normally if you bill with FOB, then the difference will not be much. FOB value on shipping bill or FOB value on invoice, whichever is lower. There the difference will not be very high. But if you bill in CIF, so CIF will be your invoice value. You will compare it with FOB and you will choose FOB. Clear with this? Yes? Let's read that explanation. Very small explanation added in the law. Value of goods exported shall be FOB value of export as per shipping bill or value declared in tax invoice, whichever is lower. So the lower one will be considered. Anyways, here lower was there. Here also lower is added now. Okay, great. Now, this has undergone a small yet significant change. Let me give you full background of inverted tax structure. Mark it as very important for your exams. Inverted tax structure. First, let's understand what was the formula earlier. The formula earlier was turnover under inverted tax structure divided by adjusted total turnover into net ITC on inputs. So basically you used to do proportionate of inputs and you should subtract tax payable under ITS. This is what you used to do. ITS. Let me give you an example of how it used to work. Say suppose your purchase value was 80. 80 into 18%. Now 80 into 18% comes to 14.4. This was your purchase. Your output is subject to 5% rate. So the product which you manufacture has a 5% GST rate. So your output used to be 5 rupees. Now because of this, there was unutilized ITC which was lying. And unutilized ITC cannot be used to make payment of salary. So the problem was what to do with this unutilized ITC. Because 5 rupees output, 14.4 purchase. You have a 9.4 balance in ITC. So government said this is a case of inverted tax structure where your purchase is subject to a higher rate compared to your tax rate on output. Government said I will give you a refund, and they created this formula. See this carefully. If I take turnover under ITS as 100, adjusted total turnover 100, I am only under ITS. Net ITC on inputs 14.4 minus tax payable under ITS. Tax payable under ITS is 5 rupees. So if I do this, I am eligible for a refund of 14.4 minus 5, that is 9.4. And I used to convert my ITC into cash. Correct? Yes, this is how the formula is made by government. ITC minus output. See, your ITC is more, na? ITC minus output. What are you doing? ITC minus output. And ITC minus output gave you the answer. But you need to understand one thing. Government has mentioned only net ITC on inputs, not of input service and capital goods. Now because of that, let me show you what happens. Say suppose input services, you have availed ITC of 21.6. So how much is your total ITC? Sir, 21.6 plus 14.4. So my total ITC is 36 and my output is 5. So my ITC balance will be 31. Sir, I should get 31. The formula says net ITC on inputs. So you will get only 9.4. Now those who were suffering because of this went to courts. But court said that no, the formula given is the discretion of the legislative. We cannot interfere and make the law. Judiciary can only interpret the law. Judiciary can never make the law. So they said nothing can be done. But they also said GST Council to look at this, because input services you are not allowing as refund, that is resulting into accumulation of ITC. So what should have government done? Government should have made this net ITC on input and input services. Your condition would have improved because of that. If government would have said net ITC on input and input services, you would have got more refund. But you know what government did? Government did not add this here. In fact, government said tax payable also we will do proportionate. Net ITC on inputs divided by total ITC on input and input services. Remember, even today capital goods is not allowed. Net ITC on inputs divided by total ITC on input and input services. Now let's see how will the formula work. See this. First of all, this data remains same. So I will copy this 100 divided by 100 into 14.4. Now when I am subtracting, let's see how much will I subtract. Tax payable 5 rupees, net ITC. Net ITC on inputs. Net ITC on inputs is this fellow 14.4 divided by total ITC on input and input services 36. Now if I do this calculation, it comes to 14.4 minus 2 rupees, which is 12.4. So are you getting more than what you used to get? First you tell me that. Are you getting more? Yes, you are getting more. You are getting more. But are you getting full? So government has brought an amendment which has increased the refund which a person under inverted tax structure will get, but not completely. They have not included input services in net ITC calculation. They have only included it in proportionate of tax payable. So earlier used to do proportionate of ITC. Now you will do proportionate of tax payable under inverted tax structure as well. Clear with this? Yes. So basically the size of formula has increased. Let's write it. And you can copy this later. I'll make you write the formula first. Here you will write the formula. Maximum refund equals to turnover under ITS divided by adjusted total turnover into net ITC on inputs minus tax payable under ITS into net ITC on inputs divided by total ITC on inputs and input services. Input and input services. Clear? Okay. Great. Now, as you recall, there are various circulars issued by CBIC on refund matters. Let's go through all the points once. See, whenever you apply for refund, you calculate one formula. That's it. Now the question is, what will you claim first? ICS UT. CBIC has clarified you will claim IGST first, then C and S equally. But say suppose C gets exhausted, then balance amount you can claim through S. Or if S gets exhausted, balance amount you can claim for C. But first you will always claim refund from unutilized ITC of IGST. Okay. Can you club refund application of different financial years? The answer is yes. Full flexibility allowed, but it should be within the time limit for filing refund claim, that is 2 years. Unutilized ITC refund will be available only for those invoices which are reflected in GSTR 2A 2B. 2A is there online, but there is no provision backing 2A. 2B has a provision, section 38. Plus This 2A 2B condition will not apply on RCM invoices, ISD or GST paid on import of goods, because these RCM you pay directly, ISD transfers by distributing credit, IGST paid on import of goods is tracked through customs. Duty free shop. People, earlier there used to be a rule 95A. Now this rule 95A used to allow refund to duty free shops at a international airport. This 95A used to provide for 1-to-1 matching, and then refund would be available to duty free shops. Say suppose I have purchased this, I sell this to an international outgoing passenger, then on this purchase whatever I have paid, that was allowed as refund through rule 95A. That 95A rule is completely deleted. It's not there now, sir. No. And CBIC has clarified that supply by duty free shop to international passengers will be regarded as a export. That means you can apply for refund through ZRS without payment of GST, that is ZRS under bond or LUT. We can claim a refund, sir? Yes. Okay. Balance in e-cash ledger, anytime you can claim refund. Time limit will not apply. No need to check whether there is unjust enrichment. TDS TCS accumulated, can we claim refund? Yes. TDS TCS gets accumulated in e-cash ledger. It is as good as you depositing money. You can claim refund. All this happened for November 22 exams, but I've just given you a summary of all the circulars. Export duty. If there is export duty on a product, you don't get refund, because export duty is normally levied when the government wants to stop export of that product. So if export duty is applicable, then you will not get refund. But if export duty is exempted, then you will be eligible for refund. Body corporate. Now, a company in India and its holding or subsidiary outside India are different persons. They are not establishments of the same person. That means it will qualify as export of service. You will get refund if Infosys Bangalore is providing services to its subsidiary in US. Okay. Time limit for wrong place of supply, 2 years will start from the date of payment of correct tax. Recredit of amount to e-credit ledger. Say suppose you have claimed refund from unutilized ITC. If you claim refund of unutilized ITC, then in that case you have converted that unutilized ITC into cash. If later on government finds that it was a erroneous refund, then in that case we will have to pay back that money. Once we pay back the money along with interest and other penalty etc., then whatever was debited from our e-credit ledger will be credited again. Recredit. Okay. Inverted tax structure. Can a trader claim benefit of inverted tax structure? CBIC has said no, cannot claim. But if I am supplying at a concessional rate to some organizations, like you don't read rate notifications, but you can supply to some organizations like research organizations at a lower rate. Say suppose the product is 18%, but when you are supplying to the research organization, you can supply at 5%. In such cases, can ITS, inverted tax structure refund, be claimed? The answer is yes, inverted tax structure refund can be claimed. But normally trader cannot claim it if there is a change in rate. Earlier this was 18%, now it is 12%. Can you file for refund claim under inverted tax structure? No, as clarified by CBIC. Then deemed export. See, deemed export, basically government has clarified that for a deemed exporter, the restriction under 17 will not apply. That means no need to check block credit. because a deemed export transaction, recipient can claim ITC and claim a refund of it. Oh, is it, sir? Yes. He will not check block credit. Even if EOU is purchasing something which is block credit, EOU will be eligible to claim refund of that. It will take ITC, then claim a refund. Your ITC will get reduced. You will get it as cash. This is a welcome clarification for persons for whom deemed export benefit is available. You remember deemed export? 4 transactions in GST. Supply to EOU. Second, supply to a person who has advance authorization. Third, supply to a person who has EPCG license. Fourth, supply of gold by PSU or bank against advance authorization. All in these all cases, recipient will not be covered by the restrictions under section 17, that is block credit, proportionate reversal, nothing will apply. He can take ITC of that and also claim a refund. Okay. Deemed export, relevant date. See, in deemed export, either the supplier can claim a refund or the recipient can claim a refund, correct? Now, the question is, when we say supplier can either claim a refund or recipient can either claim a refund, whose date of filing return will be chosen for checking 2 years limit? Because 2 years is applicable from the date of filing return. Whose date of filing return? CBIC had clarified that supplier's date of filing return will be used. So whenever supplier has filed return, from there you will count 2 years. Okay. Then some procedural changes. I mean, withdrawal, this was already brought in November 22. If you don't want a refund claim to be processed because some wrong data was given, you can withdraw it. What is new is withheld. You will mark this as amendment. Can the officer withhold refund due to a person? The answer is yes. Refund can be withheld. Sir, why will proper officer withhold the refund and not permit the refund to be given to the applicant? See, either the jurisdictional commissioner or an officer authorized by him, he gives in writing to the proper officer that this person has not filed returns, this person has not paid tax, don't give him even a single rupee of refund. Case 1. Case 2, custom officer points out that the export which has been made was fraudulent export. They said that perfumes are there in box, but only carton boxes were exported. We got to know now. Fraudulent export. Custom officer is informing GST officer, don't give refund. Third, commissioner sitting in board meaning CBIC, they undergo or they get risk analysis reports based on risk assessment. Basically, information technology guy is getting a report and telling all these exporters are trying to play some game, be very careful. If that is the case, then in that case, again that commissioner in board based on risk analysis parameter will give a direction to the proper officer, don't give refund to this person. And sir, then what will happen? Once it is withheld, it will be transferred to another team of experts, of proper officers who are good at handling such cases. They will scrutinize the applications completely, and only when they are completely satisfied, then refund will be allowed. The worst part, say suppose you applied for refund in January and this happens in March, then your file will get transferred to a new officer. When it is transferred to a new officer, it is treated as a fresh application. That means for Jan to March period, no interest. Let's have a look at the provisions. A request, the claim for refund shall be withheld where a request is received from jurisdictional commissioner to withhold payment in cases where applicant has defaulted in furnishing return or tax remains unpaid, or where any proceeding or appeal is pending and commissioner is of the opinion that granting refund will adversely affect interest of revenue in such proceeding or appeal. Second, proper officer of customs determines that goods were exported in violation of Customs Act. Third, commissioner in board CBIC or officer authorized by board based on data analysis and risk parameters is of the opinion that verification of credentials of exporter including ITC availment is essential before grant of refund to safeguard interest of revenue, interest of government. So let's see, once this is received, what should the officer do? A and C, immediate action to be taken. B is this. B, action shall be taken only after PO of custom passes a order that goods have been exported in violation of Customs Act. See, A and C, GST officers are only telling this proper officer, immediate action. But B, where custom officer is telling, let custom officer pass an order and thereafter the action will be taken. What action will be taken, sir? Let's see. Such claim shall be transmitted to the proper officer of CGST or SGST, as the case may be, electronically through the common portal in a system generated refund application, and intimation of such transmission is also sent to the exporter electronically. The said system generated form shall be deemed to be application of refund in such cases and shall be deemed to have been filed on the date of such transmission. So whenever transmission is done, at present, that is the time when the application is filed. And to whom will it go, sir? This will go to another team who will scrutinize the application in much more detail. Okay. Rule 96, this is basically export with payment of GST, and whatever GST you have paid, you will get a refund directly to your bank account. For export of goods, this provision has been a boon because shipping bill is filed for export. You fill that shipping bill data in your GSTR1, report in GSTR3B, it is transmitted to IceGate portal of customs, refund claim processed by custom officer. Very quick. Now what if there is a mismatch between shipping bill data and GSTR1 data? Then what will happen? See this. You will write a line here. If there is a mismatch between shipping bill details and GSTR1, then the application is deemed to be filed only once the mismatch is rectified. Careful. Only when the mismatch is deemed to be rectified. Only when the mismatch is rectified, that is the time when it is deemed that the application was filed. Clear? Okay. So earlier the taxpayers used to demand that I had filed the shipping bill and GSTR1 was filed, I want interest because you have not passed the order within 60 days. Officers used to say your shipping bill details don't match with the data given in GSTR1. This used to create a fight. Now government has clearly said that if there is a mismatch, unless you rectify that mismatch, nothing will happen. And the day you rectify that mismatch, then it is deemed to be filed. Okay. Great. Now we move on to new exemption entries. So basically, let's see what exemption entries have changed. It's very simple. I have told you about this, but we will see it once. All services by Department of Post are taxable. However, exemption is granted to postcard, inland letter, book post, ordinary post, envelopes weighing less than 10 grams. Exactly 10 grams, sir. Taxable. Okay. Healthcare service by clinical establishment, authorized medical practitioner, paramedics enjoys an exemption. Ambulance service by any person enjoys an exemption. No change. This is the amendment. As I told you, nothing in this entry shall apply to services provided by clinical establishment by way of providing room, having room charges exceeding 5,000 per day to a person receiving healthcare service. So 5,000 per day, exceeding that, you will not get the exemption. Entire amount of room charges will be taxable. Government is trying to break one part of composite supply and say that that particular part will be liable to GST. Whether it will stand the test of court's interpretation, only time will tell. But for your exams, if it is exceeding 5,000 per day, make it taxable. Don't forget that 5,000 will not apply to ICU, CCU, ICCU and NICU. Intensive care unit, critical care unit, intensive cardiac care unit, and finally neonatal intensive care unit. Okay. Then training or coaching, I have already made you change there. Training or coaching, this recreational activity word is now only for art or culture, not for sports. And it should be by an individual. Sports, charitable entities. Okay. Mark this important. Last entry, but a new entry being added. Technically, this is the only exemption which is newly granted. Otherwise, government has just modified some things. Department of Post earlier everything was exempt. Now they have exempted only part, but that part was earlier also exempt. Okay. Now let's talk about this tour operator. Let's see. Important. See this carefully. Tour operator is in India. Now this tour operator is providing service to a foreign tourist. Possible, sir? Yes. Say suppose foreign tourist came to India and this tour operator booked him a package. Now this tour operator in India can book a package for foreign tourist of 3 categories. 1, for a tour in India. Now if he books a package for a tour in India, then in that case taxable. No exemption. No exemption, sir? No. Sir, but he is providing to a foreign tourist now. Foreign tourist US export now, sir. People, tour operator is a intermediary. And intermediary, what's the place of supply? Location of supplier. And place of supply will be India. So it will not qualify as export, because export of service, one of the condition is place of supply should be outside India. Okay. Now, what about tour wholly outside India? Tour wholly outside India. Now, if it is for a tour wholly outside India, then in that case, exemption completely. This exemption was there and even today it is there. You will find it in your exemption chapter. Tour wholly outside India to a foreign tourist, not to an Indian tourist. Indian tourist, everything taxable. To a foreign tourist enjoys a exemption. Third one, for a tour partly in India and partly outside India. Now, this is where the problem arises. Partly in India, partly outside India. Earlier, this was completely taxable. Now, big tour operators requested government that how can you make this completely taxable? At least the part outside India should enjoy exemption. Government listened to them and gave a exemption entry. Now see this. You will have to break that tour into two parts. Tour where part is in India, that will be taxable, and part which relates to outside India travel will enjoy a exemption. Now, government has mentioned something in this exemption. What has government mentioned? Government has mentioned that the exemption will be restricted to 50% total tour value. But sir, how will you calculate part? This part calculation is based on number of days spent in India, number of days spent outside India. In fact, the law has also clarified 12 hours or more will be considered as 1 day, less than 12 hours will be considered as half day. This is also given in the law. Let me give you an example. Say suppose my friend Mr. A is a tour operator. He has booked a tour for a foreign tourist. He has booked this tour 3 nights Goa, 2 nights Sri Lanka for 1 lakh. Can you think of the taxability? 3 nights Goa, 2 nights Sri Lanka. Now, how much will be exempt, sir? 2 by 5 into 1 lakh. 2 by 5 into 1 lakh will come to 40,000. Sir, restricted to 50%. No need to do, people. No need to do, because 50% of 1 lakh will come to 50,000. So restricted to 50% of total value, it cannot cross 50,000 exemption. But here the exemption will be only 40,000. Sir, what if it is 3 nights Sri Lanka and 2 nights Goa? Sir, 3 nights Sri Lanka, 2 nights Goa, 1 lakh. Then you will do 3 by 5 into 1 lakh, which comes to 60,000. But you will not get 60,000 exemption. It will be restricted to 50% of the tour value, that is 50,000. So the exemption will be 50,000. Are you clear with this? Yes. You understood this? Mark it as very important. Institute can create a full-fledged question, and they can also include Indian tourists. Don't forget, Indian tourist completely taxable even for a foreign tour. place of supply will be in India, both are in India. Clear with this? Be very careful. No need to write example, but I leave it to your discretion, because in the notification examples are given and I have included that here because it's part of notification. So I will just stop the screen here. You can see this and then we will read the point. Let's see. Service provided by a tour operator to a foreign tourist which is partly in India and partly outside India, to the extent value of tour which is performed outside India. Whatever is for outside India, for that you will get a exemption. Clear? Okay. Note 1. The value of service performed outside India shall be such proportion to the total consideration charged for entire tour, which is equal to the proportion of number of days for which it is performed outside India to the total number of days of tour, or 50%, whichever is less. So you will do a proportionate based on number of days. Number of days outside India divided by total number of days, restricted to 50% of total value of the tour. In making the above calculation, any duration of time equal to or exceeding 12 hours will be considered as one full day, less than 12 hours will be considered as half day. Then these illustrations are given in the law, in the notification. Tour operator provides a tour operator service to foreign tourist. 3 nights India, 2 nights Nepal. People, you know it. 2 nights Nepal, so 40,000 exemption. 2 days India, 3 days Nepal, 50,000. 2.5 days India, 3 days Nepal. Then in that case, you will do a calculation. You get 54,000, but it is restricted to 50,000. You understand this much mathematics, that the moment you are spending more time outside India, the exemption will be restricted to 50%. Clear with this? Yes. Now let's take up the circulars which are issued by CBIC. Let me tell you, these circulars are included in your supplementary study material which ICAI has released in January 2023. So these circulars are relevant for your exams. These circulars had lot of other points which CBIC has included, but ICAI has not included in the supplementary material. So we will be covering those points to the extent ICAI has covered in the supplementary material. Let's go through these circulars. First is circular on fake invoices. Fake invoices, basically issuing an invoice without actual supply of goods or services. Let's see. Say suppose A has issued a fake invoice without supply of goods or services. Now A has issued a fake invoice without supply of goods or services. The question is, what is the liability on A? What is the liability on B? First of all, government has said A has not made a supply. So there is no 73-74 notice. No show cause notice under 73-74. No penalty under 73-74. No proceeding under 73-74 for Mr. A. But sir, then Mr. A will escape and keep doing this. Don't worry. Penalty under section 122 will apply, which is to the extent of tax evaded or 10,000, whichever is higher. Penalty under 122 will be applicable on this person who has issued invoice without actual supply of goods or services. Fair enough, sir? What about Mr. B? See, if B makes an actual supply and utilizes ITC, of on fake invoice, then in that case B is liable to proceedings under section 74. It's a fraud case, so you'll initiate 74 proceedings, issue a notice, penalty will be applicable under section 74. But sir, then will 122 be applicable? 122 penalty will not apply, because section 75 clearly says that if penalty under 74 or 73 is levied, then in that case any other penalty cannot be applied. Okay sir, what if A supplies invoice without goods, I mean no supply, only invoice given? B also does this, he passes the ITC to the next person without supply of goods or services. Then what will be the implication? On A, only penalty under 122. On B, double penalty under 122. One for invoice without goods or services, and second one, wrong availment / utilization of ITC. So both the penalties will apply, sir? Yes. That's what CBIC has said, that both the penalties will be applicable in such cases. Sir, what about C? Sir, C, it depends whether he is doing this or he is doing a actual supply. If he is doing a actual supply, then the implication will be same as Mr. B. If he is not doing anything, then again the implication will be same as Mr. B in this case. So it depends on what C is doing further. Clear with this? Okay, let's read. Where a registered person A has issued tax invoice to another registered person without supply of goods or services. Since there is only issuance of tax invoice by registered person A to registered person B without underlying supply of goods or services, therefore such activity does not satisfy the criteria of supply. No tax, sir, no tax payable. No notice under 73-74 on A. However, penalty under 122(1) for issuing tax invoice without, people, this word is missing, you'll have to add it, without actual supply of goods or services will apply on Mr. A. Penalty under 122 will apply. Okay. Then B avails ITC on the basis of said tax invoice issued by A. B further issues invoice along with underlying supply to his buyers. Oh, now B is doing a supply and utilizes ITC on the basis of invoice issued by A for payment of his tax liability. B shall be liable for demand and recovery of said ITC along with penal action under 74 and penal interest under 50. Further, 75(13) says if penal action for fraudulent availment of utilization is taken against B under 74, no other penalty shall apply. So only 74 will be applicable. Okay, let's see next case. A registered person A has issued tax invoice to another registered person B without supply. B avails ITC and further passes ITC to C without underlying supply. Whether B will be liable for demand and recovery under 73-74 or other provision. In this case, no demand and recovery under 73-74 on B, and A anyways only 122(1). However, B shall be liable to penal actions in 121(1), 2 and 7 for issuing invoice without supply and utilizing ITC without receipt. Both the penalties will be applicable. That's what the circular is saying. That's what you have to write in the exam. In reality, you can fight the case. Mr. C. Mr. C, nothing given in circular, but I have a view that it will be same as Mr. B in case 2. That is 73, 74, and basically in this case 74 will apply. Okay. Then circular number 172. Small points here. We'll read the point, we'll understand. See this. Whether any amount available in e-credit ledger can be used for making payment of any tax under GST law. Any tax can be paid? Yeah. Output tax can be paid, not RCM payable. Only output tax can be paid, including self-assessed or under any proceeding. So if any tax is payable due to a proceeding, that can again be paid, but it should be output tax, not RCM. You can use it for anything other than RCM, because RCM is not output tax. You remember this. Okay. Whether amount available in e-credit ledger can be used for making any liability other than tax. Oh, you know it very well, people. Tax can be used only against tax. So as per section 49.4, e-credit ledger can be used for making payment of output tax only. It cannot be used for making payment of interest, penalty, fee, others. Similarly, e-credit ledger cannot be used for payment of erroneous refunds sanctioned to taxpayer where it is sanctioned in cash. Government gave you in cash. Now you want to pay back that wrong refund which you have claimed through e-credit. You have to pay back cash. Okay. Whether amount available in e-cash ledger can be used for making payment of any liability. Yes, yes. If you transfer within e-cash ledger, you can use it to pay any liability. Okay. Then let's see GST implication on perquisites. What do you think, people? Contractual agreement, employer providing perquisites to employee, whether GST will be applicable. CBIC has said that if it is part of a contractual agreement, then in that case, it is because employee is giving a service, employer is giving him perquisites. In such cases, perquisites will not be liable as it is part of employment contract. I mean, you already know this, it's just now clarified by CBIC. Okay. ITC on leasing of assets other than motor vehicle. You remember motor vehicle, vessel, aircraft, block credit. What about renting a laptop? Or what about leasing a camera? What about leasing a monitor? What about leasing a laptop? Will you get ITC? The answer is yes. CBIC has clarified that 17.5 block credit is only for motor vehicle, vessel, aircraft, not for other goods. Okay. Then let's see 177, various clarifications again in this. Applicability of GST on application fee charged for entrance or fee charged for issuance of eligibility certificate for admission or migration certificate by education institute. See, migration certificate, you are leaving the school or college. Eligibility criteria certificate will again be for taking admission. Application fee for entrance, again for admission. CBIC has clarified that even though this is charged to prospective students, it will enjoy a exemption. Yes, this is a welcome clarification. This is good. Otherwise, department would have raised demands on this. Okay. Then there is an exemption for transit cargo services to Nepal and Bhutan. Now the question was, what about when the transit cargo truck is returning? Whether the exemption should be available both to and from Nepal and Bhutan. CBIC has again given a great clarification. CBIC has said that it shall cover both to and from Nepal and Bhutan. In fact, empty container coming is also a service associated with transit cargo, therefore will enjoy a exemption. Okay. What about sanitation and conservancy services to army? Here you will get confused. By the time you see army, you will feel exempt. People, any service provided to government is taxable. Don't forget that. To government is taxable. But if it is a pure service under Article 243G, 243W function of a local authority, then it enjoys a exemption. But army taking this service will not get the exemption. Central government, state government, sir, it depends whether they are taking it for a function which is entrusted under 243G, 243W of the Constitution. Repair of street lights, maintenance of parks, maintenance of footpaths, for all this you will get. Not for sanitation and conservancy facility to army. That's what CBIC has said. Let's see. The exemption is given for pure service and composite supply. Composite supply where goods element does not exceed 25%. Procured by central government, state government or local authority for performing functions under 12 or 11 schedule, that is 243G, 243W. It has been clarified that if such service are procured by Indian Army or any other government department which does not perform any function which is listed in 12th or 11th schedule as a local authority does for general public, then the same are not eligible for exemption. Army's job is different, people. It's not for public welfare as provided by local authority. It's for other welfare. Okay. GST applicability on transport of minerals from mining pit head. Mining pit head is where the mining material has been extracted from, to railway siding beneficiation plant by vehicles deployed with driver for a specific duration of time. People, try to recollect an answer. Transportation of goods by road other than GTA and courier agency is exempt, but renting of vehicles is taxable. You read this sentence again and you tell me whether it is transportation of goods by road or renting. Let's see again. GST on transport of minerals from mining pit head to railway siding by vehicles deployed with driver for specific duration of time. Sir, we are not doing transportation of goods by road. We are not providing transportation service to anyone. We are actually taking the vehicle on rent and then using it. CBIC has clarified that it is rental service and hence not eligible for exemption. Just circle these words. It's a rental service, not eligible for the exemption. Okay. Let's see the next one. Whether location charges or preferential location charges collected in addition to lease premium for long-term lease of land constitute part of lease premium or upfront amount, and are they eligible for same tax treatment? Now, there is an exemption available for long-term lease, industrial plots, upfront payment, correct? For a good location, you pay extra location charges. Whether that will also be exempt? The answer is yes, because principal supply is long-term lease and location charges or preferential location charges are incidental, and whatever is the principal supply, that rate will be applicable. So if principal supply enjoys an exemption, incidental will also enjoy a exemption. Okay. so eligible for exemption. I've kept these circulars a bit short so that we can save time while discussing all this. Applicability of GST on payment of honorarium to guest anchors. So basically guest anchors who are invited by TV channels, whether they will enjoy any exemption. The exemption is only for independent journalist, not for guest anchor. Guest anchors getting honorarium is liable to GST. Obviously if their turnover does not exceed 20 lakhs, then not liable to register. Otherwise there is no exemption for this. Okay. Additional toll charges for not having FASTag. What do you think, people? Government has said still it is toll charges only, it will enjoy a exemption. Is it, sir? Yes, it is same treatment as toll charges. Okay, then now with regard to pregnancy, there is assisted reproductive technology or in vitro fertilization, IVF. Basically, in case any issue is faced, these treatments are done for pregnancy. Now the question is whether they will enjoy an exemption. Is it healthcare service? Obviously yes, people. CBIC has clarified IVF is also covered by healthcare service. If you read healthcare service, pregnancy is covered specifically as a point. Diagnosis, treatment, care of various points, it's clearly covered by the exemption. Okay. Sale of land after leveling or laying down of drainage lines, whether it is taxable. Sir, sale of land is sale of land. Even if you add drainage facility and level it, still it is sale of land only. That's what CBIC has said. Sale of land, even after leveling and improving, still it is sale of land. Enjoys negative list relief, will not be liable to GST. But what about you taking the service from a works contractor who does this job for you, who does the leveling work for you? Well, whether that will enjoy an exemption? The answer is no, that will be taxable because that is works contract service. Let's see. Sale of land after subdevelopment is also sale of land and covered by negative list. However, services provided for development of land like leveling, laying of drainage lines shall attract GST as applicable for such services. Okay, this is interesting. Non-body corporate to body corporate providing renting service, whether RCM is applicable on transportation of passengers or renting of motor vehicle. People, the RCM entry says renting of motor vehicle designed to carry passengers provided by a person other than body corporate to a body corporate where the supplier is not paying tax at 12% and fuel charges are included. This is the RCM entry. Now the question is whether RCM will be applicable for transportation of passengers or renting. CBIC has clarified that it will apply only for hiring, not for transportation of passengers. But sir, what if I take a vehicle and I myself get the driver appointed and then I get the employees moved? Then in that case, even in that case, it is renting. It will be transportation of passengers only when you don't determine specific time. Transportation of passengers is when it will go at its own time. Plus you don't have complete control and authority of where it will go. Then it is regarded as transportation of passengers. Let's have a look. It is clarified that body corporate hires a motor vehicle for a period of time during which motor vehicle shall be at its disposal. The service would fall under renting and body corporate shall be liable to pay under RCM. However, if body corporate avails passenger transport service for specific journey and does not take the vehicle on rent for any particular period of time, then service will fall under transportation of passengers and then it is not liable under RCM. If you don't take it for a specific particular period of time, then fine. Okay. Again, whether hiring of vehicles by firms for transportation of employees is exempt as transportation of passengers by non-AC contract carriage. Hiring is not transportation of passengers. So obviously when you read the question, you'll get to know when they are talking about hiring, obviously the exemption for non-AC contract carriage is only for passenger transport, which is at a predetermined route, predetermined schedule. If you are hiring it, then obviously it will not be available. In fact, non-AC contract carriage excludes when it is given on charter, hire or conducted tour. That's what CBIC has clarified. Okay. Private ferry is basically vessel transportation, public transport. Whether exemption will be available? The answer is yes. Doesn't matter whether it is private ferry or government owned. The criteria is not that. The criteria is whether it is used for public transport or it is as a cruise. If it is at a cruise, then taxable. But private ferry, just because it is private but used for transportation, public transport, then enjoys an exemption. Let's see. It has been clarified that exemption would apply to tickets purchased for transportation from one point to another, irrespective of whether ferry is owned or operated by private sector or PSU. Doesn't matter. Exemption would apply. It is further clarified that public transport means transport should be open to public and not private or publicly owned. Only exclusion is transportation which is for tourism, like cruise, shikara, etc., luxury stay, all that is taxable. Okay. One very important circular but a very lengthy circular. I have not kept the entire circular. I have kept the main part and the taxability of that. Now this we already knew that this is going to be part of syllabus. Agreeing to an obligation or tolerating to an act. There was a lot of dispute in the industry as to whether tolerating an act can be considered as supply in case you break a contract. See, tolerating an act is where you sign up for that, saying that I will do this, give me this much money. That's non-compete fee, where I agree I will not compete against you, give me this payment. Then you are tolerating an act with a specific agreement where you are agreeing that I will do this if you pay me this much. But what if I enter into a contract and there is a breach of that contract? Because of that breach, there is some liquidated damages which is payable. Is that tolerating an act? Was the intention to breach the contract? Was the intention to breach a law? Was the intention to break the contract? Was the intention that the other person does not perform the contract and I will earn? CBIC has clarified that wherever there is a breach of contract, then in that case the intention was never to breach the contract, and in such cases there is no supply. So CBIC has said that tolerating an act or agreeing not to do something has to be a specific positive agreement for not doing something or for tolerating an act. It cannot be an incidental out of the main contract. It has to be the face of the contract. Like, say suppose I enter into a contract for supply of these pens, and I say if you don't supply these pens within time, then liquidated damages on breach of contract 20,000 payable. Will GST apply on that 20,000? No. That is not called as tolerating an act. That is not. Breach of contract is not considered as tolerating an act. Let's have a look. What are these examples given by CBIC? Let's see. First, we will talk about examples which are liable. That means there is a positive agreement. Let's first read this. In all these cases, there is a positive agreement for performance of such activities. There is sufficient nexus between supply and consideration, and one of the parties is under contractual obligation to tolerate an act or to do any act. You have an obligation. Let's see. Non-compete fee. You directly agree saying that I will not compete against you. Please give me this amount. Positive agreement. See this. Positive agreement for performance of such activities. Sufficient nexus between supply and consideration. This is the language which you need to use in the examination. Second, builder refraining from constructing more than certain number of floors, even though he has permission, against a compensation paid by neighboring housing society which wants to protect its sunlight. Let me give you an example. There is a building which has 15 floors. Next to it, a new construction is coming up. It has permission of 10 floors. Now the 15 floor building society gives an offer to this builder. Please don't construct 10 floors, construct only 8 floors. We will pay you 2 crore. A builder is like, okay, when I am getting 2 crore from here, let me not construct 2 floors. Builder gets into an agreement for not constructing 2 floors for 2 crores. Is that a positive agreement? Is there sufficient nexus between supply and consideration? Let's see the next one. Shopkeeper allowing a hawker. Hawker is basically a person who is there on the footpath selling various goods, to operate from a common pavement, basically footpath, in front of his shop. Again, the shopkeeper is entering into a positive agreement. Compensation for not collecting toll charges. This happened during COVID times. Also during demonetization, when 500 and 1000 rupees were banned, at that point of time, toll charges were waived for some time, saying that please allow the vehicles to pass. For that, there was a loss. Government compensated the toll operators. Whether that will be liable to GST? Yes, that will be liable to GST. Late payment charges agreed by the bank and customer. Positive agreement. Cancellation charges, which is a common industry practice. Hotel cancellation charges. Though there is no supply of hotel service, but those cancellation charges basically is a common industry practice. Now, I personally don't agree to this common industry practice because still it is breach of contract, but in exams you will have to use this word. If it's a common industry practice to charge cancellation charges like for hotels, airlines, then such cancellation charges will be liable. In fact, this is also based on a EU VAT judgment, European Union VAT judgment, which also said that cancellation charges will be liable. Even CBIC has said it will be liable, and that's what you are going to write in exam. Okay. Examples which are not liable to GST. Let's first see the last thing. In such contracts, performance is the essence of the contract. Essence is performance. Breach is not what we are looking for. We are looking for performance. Performance meaning, sir? I mean, you actually enter into an agreement to sell these pens. You enter into an agreement for getting the road constructed in this time. You enter into an agreement to get the repair work done. All these are performance is the essence. You have to do that. That's why you have entered into a contract, not to earn when the other person breaks the contract. These payments are not for tolerating an act. They are not desired outcome of the contract. Let's see. Liquidated damages for breach of contract. Compensation given to previous allottees of coal blocks for cancellation of their licenses pursuant to Supreme Court order. Supreme Court gave an order saying that all those coal blocks which are allotted at lower prices, cancel all those licenses. So government gave compensation to those people whose license was cancelled. In such cases, the compensation received not liable. Compensation for piracy. I mean, I don't expect piracy to happen and then I will take compensation. I don't get into that contract. Check dishonor penalty. Penalty imposed for violation of any law. I break a traffic signal, supply for consideration. Forfeiture of salary in the event employee not serving notice period. Important people. You have forfeited the salary because he did not serve the notice period. He was to serve notice period of 2 months before leaving the organization. But he said, no, I am leaving now only. Then in that case, that particular thing will not be liable because you got into agreement of employment, not for a purpose that the other person employee runs away and 2 months notice period money I will take. That's not the intention. Forfeiture of earnest money by a seller in case of breach of agreement to sell a immovable property. Normally happens na, whenever you book a immovable property, you give a advance. That advance amount which you have given, the contract clearly says that if you don't buy the property, we will forfeit that money. The contract was for buying the property, not to earn that advance and forfeit it and enjoy that money. Are you clear with this? Yes? Great. So these were the circulars which were issued. Now let's talk about the amendments relating to customs and FTP. Very few amendments. The only point is customs concessional rate rules 2017 has been replaced with 2022 rules. Though the impact is not very big, but yes, obviously new rules have come and that's why it becomes important. Let's see. First, e-cash ledger. See, e-cash ledger has come under customs, section 51A of Customs Act 1962. Basically, you will deposit and use it for payment against bill of entry. Government has given an exemption. This is the actual amendment. Certain supplies are notified by CBIC that you will not be required to follow the deposit of e-cash ledger method. What are those, sir? CBIC has the power to notify certain deposits to which e-cash ledger provision will not apply. Notified categories are goods imported or exported in custom station where custom automated system is not in place. Say suppose near Nepal border there is a land custom station. It does not have custom automated system. Then in that case, can I deposit in e-cash ledger and pay it through that? No. Accompanied baggage. Oh, obviously baggage. E-cash ledger, no, because I'll open a e-cash ledger, deposit there, then pay taxes. Or other than those used for making payment of duty of customs, IGST compensation cess interest, penalty or any other amount payable under this act. Then coming to foreign trade policy. See, the applicability of FTP 1520 is extended till 31st March 2023. Exemption of IGST and GST compensation cess for advance authorization EPCG has been now granted without any time limit restriction. Earlier they had said it will apply only till June, but now they have said that the IGST and compensation cess exemption for advance authorization EPCG licenses EOUs will apply without any restriction for the time being. Okay. Provisions relating to denomination of export contracts has been amended. See, export contract can be in freely convertible currency or in INR, but export proceeds should be realized in freely convertible currency. This is what the law prescribed. Now it is also provided that it can come in a freely convertible Vostro account of a non-resident bank. How will it operate? Basically, this facility was done in tandem with dispute, Russia-Ukraine dispute, so that INR is also accepted as a mode. I'll tell you how it happens. There is a person in Chennai who is exporting to Russia. Now in Russia, a bank account is opened. This Russian guy will make the payment in this bank account, and this bank account will process INR to Chennai person. There is a person in Ahmedabad who is importing from Russia. So when he is importing from Russia, he has to pay dollars. Instead of that, he will pay INR, and this will be set off with this money which is lying here. So basically, you are trying to set off a export transaction with a import transaction, so that neither foreign currency is coming inside nor foreign currency is going out. This arrangement has come into picture as of now. Are you clear with this? Yes? Okay. Now, this particular INR receipt, will it be considered as receipt in foreign currency? The answer is yes. This is permitted by RBI now. And whatever is permitted by RBI, if RBI permits receiving INR for any transaction, then it will still qualify to be export, and export benefits will be available. Let's read it. Rupee payments through Vostro account must be against payment in free foreign currency by buyer in his non-resident bank account. Free foreign currency remitted by buyer to his non-resident bank on account of this transaction would be export realization under export promotion schemes. Contracts for which payment are received through ACU, Asian Clearing Union, shall be denominated in ACU dollar. Central government may relax the provision in appropriate cases. Let's see. Now, invoicing, payment and settlement of export and import has also been made permissible in INR. Accordingly, settlement of trade transaction in INR may also take place through special rupee Vostro account opened by authorized dealer in India. See the process. Indian importers shall import through this mechanism, shall make payment in INR. Oh, Indian importers are paying in INR, which will be credited to this Vostro account of correspondent bank of partner country against invoices for supply of goods or services from overseas sellers. Indian exporter undertaking export of goods or services through this mechanism shall be paid export proceeds in INR from balances in designated special Vostro account of corresponding banks. So whatever INR was paid by the Indian importer will come back to Indian exporter in the form of INR. That means by doing this transaction, India gets benefited. There will not be a outflow of dollar, there will not be a inflow of dollar. Plus there are various restrictions placed on import export with Russia during Russia-Ukraine war. To override and to safeguard all that, this function was done. For your exams, remember one thing, payment in INR is permitted by RBI through Vostro accounts. Clear? Okay. Now we are to talk about customs, import of goods at concessional rate of duty or for specified end use, rules 2022. Now, first you understand the basic purpose behind these rules. Why were these rules brought in picture? See, when we talk about government giving a exemption from a product, the exemption which is given will apply to the product specific. But sometimes government wants to encourage manufacturing of something in India, and for that government gives exemption for parts of that particular product which is to be manufactured. But if you give an exemption to the part, such part could be used for many industries. Then how should government give an exemption? We'll take a very simple example. Government wants to encourage manufacture of knife. So government gives an exemption for import of steel. But do you agree, steel will be used in lot of other industries? Now how should government encourage manufacture of knives? For this, there is import of goods at concessional rate or for specified end use. So what a person can do is, a person can import steel for specified end use, and I will get an exemption of steel provided I prove that I am using it for knife. All other persons who are importing steel will not be eligible for this particular import of goods at concessional rate. So the benefit which is given through these rules is based on end use, to encourage end use. This is being used massively in cell phone industry as well. As you are aware, India is trying to encourage manufacture of cell phones in India so that we can become a big exporter of cell phones. Now, parts of cell phones can be given this particular benefit, saying that if these parts are used in cell phones, then the benefit will be available. You can import at a concessional rate. So just imagine steel being imported for making vessel, basically utensils. Steel used for utensils, 20% basic custom duty. But if you import steel for a knife, 2% custom duty. If you import steel for a cell phone, 5% custom duty. These are called as concessional rate notifications, where government is giving a concessional rate based on end use of that particular product. You understood the basic intention behind it? The intention is to give a exemption based on end use. Let's see who can take this. Government has now expanded this to specified end use. That means earlier only a manufacturer of cell phone could import steel. Only a manufacturer of knife could import steel. Now government is saying, let a trader import, and trader, if he sells it to this manufacturer who is manufacturing cell phones, still the benefit will be available. So government has expanded it. Now a trader can also import at concessional rate, provided he supplies it to the manufacturer who will use it for that end use. Sir, tracking this will be very difficult. People, rules are all about tracking only. Whatever questions you have regarding tracking are all answered in the rules. How will it be tracked? Who will report what? Everything is given. Let's see. Who is required to follow these rules? First, you can write an example here. Knife, import of steel, for knife 2%, others 10%. So this for knife 2% is called as concessional rate. And if you are claiming this benefit of concessional rate, you have to follow entire process. Let's see. A notification which provides for observance of these rules. So the notification where this 2% rate was given should provide that you have to follow these rules. Sir, if notification does not say, then you don't have to follow these rules. Then I can import without following these rules, sir. Second, an importer who intends to avail the benefit of any notification, including notification issued under 25, that is exemption notification, or notification under 11, that is power to prohibit import export. Oh, see, section 11, government has a power to prohibit some import export. But say suppose government issues a notification saying that this product, though it is prohibited, can be imported if you meet certain conditions. Then again, you have to follow these rules for such cases. And where the benefit of such notification is dependent on use of imported goods covered by that notification for manufacture of any commodity or provision of output service or being put to specified end use. This specified end use is for trader. A person who has imported that steel, he is not using that steel. He is giving it to another person who will use it for specified end use. May import goods at concessional rate. Sir, so we are doing all this to save tax, na? We do everything to save tax. Common portal. Common portal will mean common customs electronic portal referred to in 154C of the Act. CBIC has notified IceGate as common portal for customs. That's the customs website. Specified end use. Now what is specified end use? Means dealing with the goods imported in manner specified in the notification and includes supply to intended person, and the term end use recipient shall be construed accordingly. So basically you have imported it, you are giving it to the other person who will use it for specified end use. Now let's see all the rules. Importer to give a one-time prior information. Now all this is electronic, so you will have to first give all your details before importing. When you give your details, IIN will be generated. We'll see what is that IIN. The importer is required to provide one-time information on the common portal in prescribed form containing the following particulars. Let's see. Name and address of the importer and job worker. Obviously, importer can further give it for job work. Goods procured, processes undertaken at the manufacturing facility of importer or job worker. Nature and description of goods imported used in the manufacture. Steel. Particulars of the notification under which you are claiming this. Nature of outward service which will be used. Particulars of premise intended to be used for unit transfer. Say suppose you have two branches, you want to unit transfer to another branch, there also some manufacturing will be done. Details of end use recipient in case where goods imported are supplied for specified end use. If you are supplying it to someone who is going to manufacture knife, his details also needs to be given. Intended port of import. Once you give these details, IIN is generated. So what is IIN? Import of goods at concessional rate, identification number. Such a big name, sir. You need to remember it. Import of goods at concessional rate, identification number. Sir, identification number we remember. We just have to remember this. This is the purpose, people, why we are reading this. Shall be generated against such information. The importer has an option to update prescribed form in case of any change. Obviously, these informations can keep changing. Today you got a concessional rate notification of steel. Tomorrow you could get it for plastic which is used in knife. So you can then change the information. Importer who intends to avail the benefit of the notification shall submit a continuity bond with surety or security. Surety or security maximum is 25%. As deemed appropriate by ACDC, having jurisdiction over the premise where goods imported shall be put to use. Continuity bond meaning, sir? See, are you saving tax? Sir, I would have imported for 10%. Now I am importing for 2%. So if I am importing for 1 crore, then I am saving, sir, 8 lakh. Now, do you agree that government is risking this 8 lakh on your ability to manufacture knife? Say suppose you don't manufacture knife, then government will lose 8 lakh. That's why government is taking a bond of 8 lakh. They are not taking 8 lakh as money, bond of 8 lakh. Sir, will we have to give specific bond for everything? No. You can give a bond of 50 lakh. Whenever you import this 1 crore worth material, 8 lakh will be subtracted. Whenever you use this properly and specify it in the return, this will be added again. Next time you import where the implication is 6 lakh, that will be subtracted. Next time you import where the implication is 5 lakh of duty, that will be subtracted. Continuity bond is a bond for a higher amount which can be debited and credited as and when you import and use it properly. Import, use it properly. Import, use it properly. Okay. The importer who intends to avail the benefit shall submit a continuity bond with surety or security, that is bank guarantee, as deemed appropriate by ACDC, having jurisdiction over the premise where the goods imported shall be put to use for manufacture of goods or for rendering output service or being put to use for specified end use with an undertaking to pay. If you are claiming exemption notification benefit, you undertake to pay the duty leviable without exemption along with interest at 15% from the date of import till actual payment. Now, this is if you are claiming an exemption. If you are claiming any other notification benefit other than exemption, like there was a prohibition but it was allowed for knife. Say suppose plastic banned to be imported but allowed for knife, and you claimed that benefit and imported plastic. Then if you don't use it properly, there will be an implication. In such cases, you give a bond of the amount equivalent to assessable value of the goods. 5 lakh worth plastic which was prohibited, government is allowing you to import. Bond has to be of 5 lakh, that I agree to pay 5 lakh if I use it for some other purpose. Okay, let's see the procedure. Importer who intends to avail the benefit of exemption notification shall mention IIN and continuity bond while filing bill of entry. Or you can just write benefit of a notification. Accordingly, ACDC shall allow the benefit of notification to the importer, because it is not necessary that it's an exemption notification. It could be a notification for prohibited goods as well, or any other restriction. On bill of entry being filed, the bond submitted gets debited automatically in the custom automated system, and details are made available to jurisdictional custom officer. Jurisdictional custom officer is basically the area officer under which your premise is as an importer or as a trader who is importing for selling it. What records are you required to maintain? Quantity and value of goods imported, quantity and date of receipt of goods, quantity of goods consumed, quantity used domestically for manufacture, quantity exported to fill intended purpose, quantity of goods sent for end use recipient. You are selling to a person who will be further using it for knife. Quantity of goods sent for job work, quantity received after job work, re-exported under Rule 10. So re-exported meaning, say suppose you are not able to use it for the intended purpose, you should re-export it back. Sir, if I cannot re-export, then pay duty along with interest, differential duty. Quantity remaining in stock according to bill of entries. The importer shall produce the said account as and when required by jurisdictional ACDC. Further, non-receipt or short receipt of goods imported importer shall intimate such non-receipt immediately on the common portal. Immediately, sir, yeah. If there is a non-receipt, inform immediately to the department, because department is allowing you to import at concessional rate. Department is giving a benefit. Importer shall submit monthly statement and the due date is 10th of the following month. Basically, you will provide all the details of how much is imported, how much is being used, all that details have to be provided. However, importer may submit the details of goods consumed in prescribed form at any point of time for immediate recredit of the bond which has become part of monthly statement in the subsequent month. Say suppose you don't want to wait till 10th. You have actually used the entire steel for the correct purpose. You want a recredit in your continuity bond, this 8 lakh. You want a recredit. That you can do anytime. Before 10th, you can do it. So that your continuity bond is now in place and you can import more. Okay. Procedure for allowing imported goods for job work. People, basically procedure is very simple. You will send it to the job worker. Job worker has to use it correctly. You should get it back. All this should be with delivery challan or e-way bill as may be applicable. Law also mentioned invoices, but let me tell you that when you send it to the job worker, you don't send it with invoice, you send it with a delivery challan. Let's see. The importer shall maintain a record of goods sent to job worker and mention the same in monthly statements. Importer shall send the goods under a invoice or wherever applicable through a e-way bill as specified in CGST Act, mentioning the description and quantity. Maximum period which goods can be sent for job work is 6 months. In case importer is not able to establish that the goods sent for job work have been used as per particulars mentioned in Rule 4, then custom officer shall take necessary action under 11 and 12. We'll see 11 and 12. 11 and 12 basically recovery and penalty. You can write here recovery and penalty. Okay. The job worker shall maintain an account of receipt of goods, manufacturing process, waste generated, produce the account before jurisdictional custom officer as and when required by such officer. After completion, shall send the processed goods to importer or to another job worker as directed by the importer. Don't forget, you cannot sell from job worker's premise under this notification. Normally under GST, you can sell from job worker's premise. Under this notification, no, you'll have to get it back. Okay, same process for unit transfer. Same thing. Unit transfer basically from one branch to another. That's allowed, sir? Yes. Same thing has to be maintained, and from that unit you cannot sell it. You have to maintain the records, description and quantity. After completion, get it back. Get it back. Get it back. You cannot sell from the other unit. Though it is your own unit, you can't sell it. Now, the next point is about procedure for supplying imported goods to end use recipient. This is talking about trader. So, trader selling to manufacturer of knife. So, trader has imported using concessional rate, and now he is supplying for that end use recipient. Who is the end use recipient here? Manufacturer of knife is the end use recipient. Let's see. The importer shall maintain a record of goods supplied to end use recipient. He has to maintain the records of all these during the month and mention the same in the monthly statement. Importer shall send the goods under invoice and e-way bill, mentioning the quantity and description. What all should he maintain? End use recipient shall, people, manufacturer of knife has to maintain accounts of receipt, manufacturing process, give those details to officer, other relevant details to importer for fulfillment of benefit of the notification. If you see carefully, end use recipient also has an obligation. He has to also maintain proper records, because he is the one who is going to use it for knife. Okay. Re-export or clearance of unutilized or defective goods. Let's see this. Importer who has availed the benefit of a notification shall use the goods in accordance with the conditions specified in concerned notification within the period specified in the notification or 6 months from import if no period is mentioned. Careful. If the notification allows 1 year time, you can use it for 1 year. But if notification does not provide for a time within which you have to prove that steel is correctly used for knife, then in that case 6 months. However, 6 months can further be extended by commissioner for not exceeding 3 months. Total 9 months. Any re-export of unutilized or defective goods shall be recorded by the importer in the monthly statement by providing details of necessary export documents. Further, value of such goods re-exported shall not be less than the value at the time of import. If you are not able to use anything, you can export it back, no liability in such cases. If you export it back, no liability, but that export value should not be less than your import value. You cannot lose foreign currency for the country. The importer who opts to clear the unutilized or defective goods for home consumption. Oh, so he does not want to export. He wants to clear it for home consumption. Shall pay the duty along with interest on the common portal, and particulars of clearance and payment of duty shall be recorded in the monthly statement. You can also clear capital goods imported after having been put to specified purpose. In such cases of capital goods, you have to pay duty along with interest on depreciated value, straight line method, part of quarter considered as full quarter. But remember, these start from date you put the machine to put to use. Capital goods put to use till the change happens. What is the percentage, sir? Percentage 4 first year, second year 3, third year 3, fourth and fifth year 2.5, thereafter 2%. You need to remember this. For the purpose of computing rate of depreciation for any part quarter, full quarter shall be taken into account. Depreciation shall be allowed from date when the imported goods have come into use. Oh, put to use, people. Your direct tax principle. For the purpose specified in the exemption notification up to the date of clearance. Importer shall record it in the monthly statement. This is obviously an obligation which he has to follow. Now, recovery of duty in certain cases. Be very careful. If there is a failure on part of the importer to comply with Rule 10, because as per Rule 10, he should either use it within 6 months or export it or clear it. Use it within 6 months, export it or clear it on payment of duty along with interest. Either use it or pay duty, the ACDC having jurisdictional over the premise where imported goods shall be put to use for manufacture of goods or specified end use or for rendering output service shall take the action by invoking the bond to initiate recovery. How much will we recover, sir? Whatever he has agreed while giving the bond. Let's see. In case of exemption notification, amount equal to duty leviable on inputs without exemption reduced by the duty already paid along with interest from the date of import till actual. In all other cases other than one where exemption is given, amount equal to assessable value. 5 lakh plastic, entire 5 lakh payable. If you don't put it to correct use, dangerous. Government is giving a benefit, but if you don't follow the condition, that's it. Okay. Notwithstanding anything contained in these rules, in relation to removal and processing of imported goods for job work, the importer shall be responsible. Careful. You can't say job worker lost it, what can I do? Importer shall be responsible for ensuring that the said goods are used in accordance for the purpose provided in the notification. Importer has to make sure that my end use recipient is using it correctly. Importer has to make sure that manufacturer is using it correctly. Importer has to make sure that job worker is doing the correct thing and maintaining everything. Let's read. And in the event of failure to do so, ACDC having jurisdictional of the premise where imported goods shall be put to use shall take actions as provided in these rules. without prejudice. That means there could be some other thing as well. Let's see. And any other action which may be taken under this act, rules or regulations, or any other law for the time being in force. Other actions can apply based on other laws. Plus, people, you don't read customs in penalty. Penalty under customs may also apply in such cases. Okay. What about penalty? Importer or job worker who contravenes any provisions of these rules or abets, basically encourages such contravention, shall be liable to penalty to an extent of amount specified under 158(2) under Customs Act without prejudice to any other action which may be taken. What can be beyond penalty, sir? Prosecution. You understand prosecution? Imprisonment. Okay. This is not in syllabus. Section 158 you don't read in your syllabus. So this is where this particular rule ends. All the best for your examinations. Do well in your exam. Bye bye.